Hello, everybody. We are live. Gonna wait for people to join. I'm live with James. I'm sure the viewers are already familiar with James, but for the people who haven't, or this is the first time you're ever, tuning into one of our live streams, James is a trading coach here at Ola Prime, and he comes with over 20 plus years of experience. That's in Forex, stocks, commodities, you name it. Quite a master with technical analysis and market psychology. Definitely comes with experience, and he's probably pretty amazing at like fundamentals. I'm always blown away by his fundamental knowledge in terms of news and how he just kind of gets the news and kind of creates a trading plan out of it. It's pretty amazing. Am I right in saying you have managed multi-million-dollar funds and traded for a European bank in the past as well?
Yeah, bank in Holland. I had my own fund, and I worked for a bank in Holland for a while.
Wow.
But I trade for a living now. I mean, that's what I trade quite a lot of money, my own money, and it's a tough life, I have to say. Trading's not easy. But after about 25, it's been about almost 30 years actually now, Sam.
Wow.
It gives my age away a little bit, but it's after a period of time, you kind of get used to it. And I think the main thing is to overcome the emotional roller coaster that everyone experiences when they start out. It's really difficult to overcome that. But if you can, and it is possible, and in fact, I think most coaching should be on mindset rather than technicals, which is not, no one's interested in it. But I think that should be the main focus, because that is the biggest hindrance to most traders.
Yeah, no, couldn't agree more.
It gets better.
Couldn't agree more. Well, it's always great to have you on, James. And I'm sure the viewers in this, I can't even talk right now, this session are going to really appreciate everything that you're going to show them. I see comments coming in. Emily Grace says, hi all. Hi, Emily. Thank you for joining us. Any other comments? If people want to, if you have any questions trading related, please leave them in the comment sections, regardless of what platform you're watching. We will see them. So yeah, awesome. I think we can pretty much start. James, you've already got your charts up, so I'm just going to let you rock and roll. Do your thing, man.
All right, mate. Well, we've got 13 minutes until the US market opens. Obviously, pre-market's open already, and I've got the NASDAQ and the US 500 here. And these are the hour charts. So I'm just going to sort of zoom in from the hour charts down to the 15, down to the 5-minute charts. And hopefully by the time I've done that, it'll be time to start trading. So let's have a look at the NASDAQ and the S&P. They're very similar, actually, in shape, structure, everything. And one doesn't really need to look at both charts. So bear in mind, this is an hour chart. So we're going back a number of days here. We've obviously got a downtrend on the NASDAQ going back quite a long time. Sort of sideways for a long time, very messy, very choppy. That's what the most of this year is going to be like. So get used to it, because it's going to be this sort of thing all year long, I think. But we did get a bit of a downtrend, which is a relief in some sense, and we've moved down quite nicely. So we've got a bit of structure going on in this market. We can draw some trend lines for a start, and we can also draw some channel lines. So I've drawn two trend lines on the NASDAQ, just that one. And a steeper one coming down on these more recent highs. We did spike through there on the NFP news that came out a little while ago. And actually 19 minutes? It was almost an hour ago now.
50 minutes ago, yeah.
So the non-farm payrolls number was 150,000. Expected was 160 or 170. So it's a bit lower, but worse. Actually, that's not too bad for stocks, because normally when we get a good NFP result, you'd see a rally in the dollar and sometimes a decrease in stocks. But a lower, not too low, slightly low number is probably good for stocks. And you see a very muted reaction here on the stock market, a little bit of a spike up and then move down. What it normally affects, though, is currencies. And looking at the currency markets, these are all day charts. But if you have a look at the euro, for example, on the hour chart, top left-hand side, almost no reaction, just a little spike up and then a move down. So let's go back to these charts. So with the NFP being relatively weak but not terrible, it's probably a good thing for stocks. It means that the Fed will be thinking more about cutting interest rates. There'll be more pressure on the Fed. Jobs numbers are written down. 20,000 government jobs were lost. That's probably just the tip of the iceberg. So the number will be worse next month. And all of that puts pressure on the Fed to decrease interest rates. And Donald Trump's also on his back. So that's for sure. So I think they'll be cutting sooner rather than later. And I think the market was also probably thinking along those lines. And considering all of that, my favorite directional move for today to end this week is up, not down. I know that's kind of contrarian. Jobs numbers weak, markets weak. Are we entering a recession? We're not. Are tariffs going to destroy the universe? They're not. I think those tariffs will be negotiated away sooner rather than later. It's not good for anyone. It's just a tactic, a ploy to put pressure on various other external governments for different reasons. Yeah. Sometimes drugs, sometimes, finance and trade balance, for example, with China. But so I don't think that's a major consideration. I think we've got space for this market to move up. We've corrected 10% on the NASDAQ. It's a corrective. It's a correction. It's not a collapse. It's not a bear market. It's nothing like that. It's just a 10% correction. We get 1 or 2 every single year. This one has actually corrected back to, let me just show you very quickly before we go to that chart. We go back to that chart. I've only got a couple of minutes before the markets open. This is the NASDAQ on the day chart on the NASDAQ. That's about a 10% correction from the top down to where we are now. And notice we've only come back to the 200 period moving average. We've come down to the trend line, this long-term green channel trend line down here. It's the perfect place for it to correct. It should correct there. Last time we got to the 200 was in August. Time before that was August last year. Time before that was October 2023. The time before that was March 2023. So once or twice a year, we get to the 200 and we bounce, if that's going to be a correction. If it's going to be a recession and a collapse, then we'll move straight through here very rapidly today, probably, and collapse down into some of these further support levels down below us. But until that happens, it hasn't happened, and it's not something that we should be afraid of. If we get the trade wrong, we get it wrong. But I think we're going to probably go up today. Now, I could be completely wrong. In that case, I've got protection in place if I enter a trade. So this is the hour chart of the NASDAQ. Let's go to the 15-minute chart. And all I'm trying to do is draw horizontal lines and look at the stochastic. I explained in the last session that we had, this is the 1473 stochastic. I'm trying to draw in a few lines, an order block up here. That's the market structure and order block, a couple of trend lines and a couple of horizontal lines. One at the bottom, one at this order block ledge, previous swing low and swing high. Very clear level that we spiked through and didn't hold earlier with the NFP result. That level still remains intact, was not defeated. And then we've got another little line up here. And then we've got these order blocks up here. So those are all my resistance levels into which I'd like to sell or buy a breakout through. If we buy a breakout through the top of these lines, then what we'll be looking for is a breakout, a pull back down to that line from the top side, and then a reversion back to the long direction. Same thing on the bottom side. If we break down through these lines or bounce off them, I'll be looking to trade. There's only one below us, so it makes it easy on the bottom side. If we break that line, we're probably going down to the next support level, which is quite some way below. Okay, so we've got our levels in place. We've also got the 1473 stochastic, and I've got two moving averages. The red one, I'm going through this quickly, but we'll have time to digest this as we go along. The red one is the 50-period moving average, and the blue one is the 20-period moving average. The orange one, which is difficult to see, and maybe I should change the color, it's this orange one here. That's the 20-period VWAP, and that means volume weighted average price. It's similar to the 20-period moving average, but it's weighted by volume per candle. All right, so bigger candles get more say in where that VWAP line is. That's the 15-minute chart. So I go down to the 5-minute chart. This is our trading chart for day trading. I'm not a day trader. I keep on saying this. I think I said this last time, Sam. I used to be a day trader. I'm now a swing trader. That's what happens when you get old. It's kind of more chilled, more laid back, more, zoned out, that sort of thing. That's what we do when we get old.
I wouldn't call you old, James. You don't have to. Yeah.
Well, I'll be 60 very soon, which is pretty old. Yeah.
I'm actually genuinely quite surprised. I didn't think you would be 60, but no, you still in your prime. Don't worry.
Yeah, a few months time, I'll be 60. So wow, that's crazy, right?
It
And I
is.
still
It is.
feel like, and the girls tell me I still look like I'm 40.
Yeah.
But
Yeah.
anyway,
Absolutely.
only my wife and my daughter though. Right. So this is a 5-minute chart. Now look at what a mess it looks like when you zoom in with the NFP spike and all of that stuff. This was the last session. Remember, yesterday was a complete mess, absolutely choppy, wild, crazy. But holding that bottom at 20,000, same today, messy, choppy, NFP, holding that bottom at 20,000. Will this be a double bottom? I think it could be. So if we want to go long, we can do one of two things, one of three things really. We can wait for a cut down through 20,000 and a bounce back up and a close back above. That will put me in long. Or we could visit 20,000 and bounce off there, forming a reversal pattern with an oversold stochastic, which we already have. That's another option. Or if we don't get either of those, we could rush up through either this downward facing trend line or this order block and black line here and close above it, bounce back down. Let me draw it for you quickly. So sort of rush up through here, that sort of thing, close above it, and then bounce up and then continue. And imagine that line is green and that it looks like a line. I'm drawing it with a mouse pad, so it's not that easy. So a move up through there, a bounce back to support, which was resistance, and then a continuation. So three possibilities to get long and really only one to get short, and that's a breakdown through this line, a retest from underneath. Actually, I can use a better tool for this. A breakdown through this line, a retest from underneath. That's the selling point right there, and then a continuation downwards. All right, so those are three potential trades on the NASDAQ, and this is on the 5-minute chart. If we go to the US 500 or the S&P, Standard & Poor's Index, as the old timers would call it, there's the hour chart, almost identical to what we saw on the NASDAQ. 15-minute chart, almost identical, little spike up through resistance and the order block with the NFP through that trend line and touching the low point there. Now, this is the 15-minute chart. Let's go to the 5-minute chart to see where we are. There's that messy day yesterday, awful day. Also related to jobs, by the way. Jobs report came out that time. Jobs report came out today. Different jobs reports, but one was unemployment, one was jobless claims, and this is non-farm payrolls. And that non-farm payrolls now report has been expanded out to include more details. So if you go and look at your economic news calendar, you'll see that you'll get other numbers there now, like government jobs, private jobs, all sorts of other categories within that NFP. And you'll see that government jobs have been cut by, I think, 20,000. I've got to examine the numbers a bit more closely. Government jobs will be cut even more next month. And I think we're going to see these jobs numbers dropping down, hopefully not too fast, just at a trickle. And that will cause the market, I think, to be more bullish than bearish, because there will be more and more pressure on the Fed. Not panic. We don't want panic. We don't want jobs to become, like minus 500 on the NFP data next month. But maybe we make only get 20,000 new jobs, or 50,000, or 100,000. I think 20 or 50 would be a bit too low, but like maybe 90 or 100. Not catastrophic, but not good. And I think that'll continue to put pressure on the Fed. And I think that's where we are today as well. So those are my general thoughts on where we might go on the stock indices. What do you think, Sam?
Yeah, I mean, I'm not a swing trader in terms of, but it's always good to know to have a bias of the overall long-term direction. It probably plays maybe 5 to 10% of my overall kind of, thought process. I don't spend too much time analyzing the long term, but from what you said, I mean, I would agree. If I was a swing trader, I would probably agree 100%. But yeah,
okay.
It's very interesting. It's very, very interesting. Yeah. I do love how you break down the charts. You do it so fluently, and that shows the experience, 20 plus years. I mean,
Yeah. It's a funny thing. Actually, my wife often asks me, she says, what is it that you see on charts? I mean, so she looks at there we've got currency charts. Here we've got stock markets. Here we've got crypto. Here we've got energies. Here we've got the VIX and TLT and 10-year yield and so on. Here we've got softs and grains and commodities. And then there's a scalping chart for a day trading chart. So when you look at all these charts, for many people, it just looks just like, like a spider's crawled across the page, or your kid got a pen and started, going mad. But it's really quite an interesting thing, because as time goes on, and I think it's like that with anything, where, anything that you do, you begin to see patterns. Sometimes we identify patterns which don't exist quite a lot of the time, but there are real patterns in trading charts and in markets and in market behavior and human behavior, which is slightly predictable, not totally, but somewhat. And so I can look at these charts and see things almost immediately. And in fact, I've got to the point where I started in the old days. We didn't have a lot of charting. When I started trading before the year 2000, a lot of you won't have been born by then. When I started trading then, were you born by then, Sam?
I was. I'm a 90s child, just about on the 90s.
Okay.
I'm 34 this year, so.
Okay.
Yeah.
Yeah, same as my son. He lives in London. He was born in 95, I think, 91. 91,
yeah, I was going to say, yeah.
Yeah.
Maybe I know him. Who knows? I mean, both
maybe.
The same age.
He works in the city. Is your office in the city? He's in the city.
I did work in the city. I don't anymore. I work home office. I mean, we do have an office, but it's not right in the city. But yeah, I did used to work in the city. Maybe I did. Okay. Maybe I was on the tube one day, next to your son. It's a small world. You never know.
I guarantee you've been in a pub whilst he's been in there at some point.
Most likely. Most likely.
Yeah. Okay. So I don't know how we got onto that. Yeah. But anyway, you begin to recognize these patterns as time goes on. And I was saying, so I was saying that one of the problems that traders have is that we try to see patterns where they don't exist. Often we fit patterns into our own narrative of what we think the market should do, or the positions that we're in, or in other words, what we want the market to do. And so we make up patterns in our mind, and we start to get mentally disturbed, and everything gets weird, and you then start to second guess yourself and that's when traders start to readjust their strategies. And you know what it's like. Everyone knows what it's like. And you think, well, I'm going to ditch all of that and look for different types of patterns. But really it's all about screen time and sitting in front of your charts day after day after day, watching them do the same things over and over again, and being able to spot what those are. So I know that these chart patterns right in front of us on the 5-minute charts here are absolutely typical for NFP. The first move is always often the wrong move. Initial, so we got a big move up and then a correction down. And then the third move, which will probably take us to the top of this hour in about 27 minutes time, will probably take the price back up to right where we started before the NFP came out. And that's normally the case. And you'll see, and in other words, you'll get a long wicked 1 hour candle with long wicks on the top and on the bottom. I'll show you what this looks like. We might be forming that already. So although it's not a long wick, this is a very muted move, and this is the hour chart, but we'll have a long wick up to the top. Now, in this case, we've got a tiny wick to the bottom, and we may end up closing this hour right where we started. And then we have to go and say, okay, we're going to ignore those wicks completely. This is a very good strategy when you have things like the NFP or interest rates announcements, or some of the big movers in the markets. You'll get a wick to the top, a wick to the bottom. Price will return back to where it started right at the beginning, at the top of the hour, and you're left with the original chart. If you cut off the wicks, ignore them completely, and look at your chart again, and just assess the way you would have looked at the chart without the wicks, you can then make a much better decision. And very often it'll become clearer. So I'm going to ignore any wicking around this hour that's occurred. You can see we're already bouncing off the bottom pretty sharply, and I expect that we'll move up. We didn't get a break through the bottom, and so we're going to have a bit of a problem because we don't have a bouncing point or a breakdown and recovery point. We're going to have to go with a breakout, which makes things more difficult because we're going to have to wait for the breakout and then the retracement, which is always difficult because when the breakout occurs, you normally want to leap in straight away. Sometimes you don't get the pullback to get back into. That's the fear of missing out, FOMO. So we don't want to get FOMO'd into a trade, but we want to be patient and wait for the breakout and the pullback and then the resumption of the trend if we get it. That's what I think we're going to get today. And I think we're going to get it on crypto as well. And we've got the crypto conference coming up this evening. And I do believe that it has been now officiated that Bitcoin is now going to be part, or at least some variant, some coins maybe XRP, Bitcoin, maybe a couple of others, maybe Solana, I think it was named. But I think it's now official. That is going to become part of the reserve, and I think they'll announce that later. And that might actually just crash Bitcoin. It might be a bit of, buy the rumor, sell the fact, but we'll have to wait and see.
Interesting.
Yeah.
I mean, I'm not much into Bitcoin, but I would have naturally assumed that would pump the price up of Bitcoin. So I'll be interested to know, like, why you think it might actually crash Bitcoin if it does become fact that it will be held in reserve.
So this is the Bitcoin day chart, and very strangely and funnily and oddly, it looks almost identical to the S&P and the NASDAQ, and it doesn't always look the same. They don't always trade in tandem. They are currently doing so. Look at these spikes through the 200-period moving average, exactly the same as NASDAQ and S&P, and also a similar sized correction. Also a trend line coming up from underneath this big red line, which we saw on the NASDAQ. Let me show you the NASDAQ quickly. There's the trend line, this green line. All right. You go across to Bitcoin, same thing. There's the 200 on the NASDAQ. There's the 200. We're long on the NASDAQ from the 200 actually. Wow. And I'm also long on Bitcoin from the 200. So yeah, so there's a lot of buying here. And actually this last little spike, this was last night at about 2 o'clock in the morning, middle of the Japanese session, we had a massive move down again, and then just as quickly it recovered. And I think this maybe have been related to the Bitcoin news that there will indeed be some reserves, crypto reserves in the US Treasury.
Interesting. Yeah, very interesting.
So and what I was saying is, sorry, Sam, just to answer your question, that collapse, pump down, and spike up again could be, like by the rumor, which is the pump up, which we've just had. Well, we've had 3 now from the bottom. Those could be all by the rumor, crypto reserves in the Treasury. And then when they actually announce it tonight, we could just see this collapsing. I don't quite like these 3 attempts. I don't like more than 2. So I'm a little concerned about that.
Really quick, we had a comment. Jesse said in regards to the question, less supply, more holding by banks will cause a decrease in circulation, therefore less trading, less people buying, and more hodl. I'm assuming hold. Well, yeah, hodl, that's a crypto term, isn't it? Won't help move Bitcoin. Would you agree with that?
Less supply. I think Jesse is talking about the miners who are struggling to make a profit right now. I know Jesse. Hello, Jesse. Jesse's actually a Bitcoin miner. I think maybe he.
Has there been a bit of interaction in previous sessions? Is this?
Yeah.
Okay, very nice.
So it's something I know nothing about Bitcoin mining at all, and I don't invest in Bitcoin mining companies either. I know zero about it, but Jesse actually is a Bitcoin miner. He's been doing it for, I don't know, 5 or 7 years or something.
Very cool.
But I think what he means is that Bitcoin mining has possibly decreased, and therefore there's less supply. I don't know if I quite go with it, but banks holding more by banks. Well, it won't be banks. I don't think banks are allowed to hold crypto, but the Federal Reserve may hold it, perhaps, if this all goes through. I think possibly it can only be a good thing for crypto because it brings in a little bit more regulation, a bit more stability, a bit more affirmation of this token being something more serious. I don't know. I have no idea. Actually,
it brings in more credibility. It brings in definitely more credibility, and I think overall investors will take it more seriously as well, as an actual currency as well. I mean, I think long term it's only beneficial if it does happen. It's only beneficial for Bitcoin. But you might be right. There could be a sharp little decrease, but I think overall, if it is,
well, I'm long on Bitcoin. Just going back to these charts, this is let's have a look at this one on the S&P, not so much on the NASDAQ. On the S&P, we just had a big spike down and bounce back up again on the 5-minute chart. So a nice rejection of those lows again and trying to push up. This blue line here, and this is another way you can trade if you'd like to, if you want to be really aggressive, this blue line here is, and I would do this on an hour chart, maybe not on a 5-minute chart. This is the 20 period simple moving average, and you could simply buy a close above it. In a trend, it will generally stay on the correct side of the moving average of the 20 SMA, like you can see there. And then you can also use that as your exit point, as a trailing stop loss, if you prefer to do that once it gets going. So we're just touching against that right now and we're about to close above it. And there's the 50 and there's VWAP right there. And I dare say if I put some volume candles on, the volume will be quite high right now. And for those of you who like to follow volume, I'll put that on just to humor you. I never have volume on my charts because I can see it in the price action without the volume. But there it is. Yeah, look at the volume coming in there. Obviously, it's because it's the beginning of, or the opening of the session. So, you know, that's just, you see the big volume during the US market. But this little spike up here on this candle is something that will be interesting. Quite a lot of volume there, and a lot of volume on that up candle. And that was before, that was on the NFP, before the market opened. And then we had another volume spike on that downward spike down. And now we're just sort of, we've got 4 minutes to go before this candle. Be interesting to see how much volume came into this buying candle when it closes.
Yeah.
But I'm certainly looking to get long on either of these or both of them at some point in the next little period.
Interesting. Very good.
Now on the NASDAQ, things are slightly easier right this minute because we've got a downward sloping trend line. Let's just show you where this comes from. No, that is the hour chart. Yeah, so this trend line that we're up against right now is the downward sloping trend line that I just showed you on that hour chart, the steeper trend line, this one here. But it's not that short. It goes back, you know, I don't know, that might be 24 hours probably, something like that, or maybe longer. This goes back, when was this? When at the top of the trend line, 9 o'clock on the 6th. So yeah, so more than 24 hours ago. So it's quite a long trend line, especially when you're talking about a 5-minute chart. And if we break above there and close above there and retest it, I'll be interested in getting long here. Ignoring that spike. Remember, a lot of people will be saying, well, what about the spike? And we've got this level above us. We do have that level above us, and it's a pretty important level. It's several order blocks stacked on top of each other and a double top swing high. So you may want to wait for a breakout through there and then a close. Let me just draw it for you again. So you might want to wait. I'm going to change the color right now. You might want to wait for a breakout through that order block area and that double top. There's the double top there, as you can see, and then a resumption. Or if you're more aggressive, you might want to start that off sort of at the trend line, a break through the trend line over here, right where we are now, a pull back to the trend line, and then be very cautious when we get to that double top order block zone. But a breakthrough there could see you then add on another position. And that's probably something I'd like to try. So we get another position here. We break out through there like this, pull back again to that top line now, and then resume again. That would be another buying point for me. So we could, if we were aggressive, I'm not saying we're going to, maybe we will. Maybe we'll get long here on the pullback, and then through there, and then long here again on the pullback. Then we'll have two positions, and the first one will be, you know, relatively protected by that point by distance from the price, and then we could have two positions on that. So that's the kind of thing I'm thinking, and I like the fact that we've got clear breakout areas. I'm not a great fan of great breakout trading, but we can do it, no problem.
Yeah.
So we're moving up. Here we go. I think what I'll do is do that on the NASDAQ. I've got trading buttons on these charts, so I can immediately take a trade and do it live off these charts. This is my broker's account at Pepperstone. I normally trade at Black Bull, but I don't have TradingView integration with my Black Bull trading account. I've only got a Pepperstone integration, so I'm going to do it using Pepperstone. I should be doing it on my Ola Prime account, but I don't have that open. And also, this is an application that I'm running here, TradingView. And to get to Ola Prime charts, I have to go into my browser, and StreamYard's the software you're using, and makes it very difficult to switch between an app and a browser. So, yeah.
But you can do it in the background.
I've spoken a lot. What do you think, Sam? Sorry.
Yeah, no, if you're about to take a trade, concentrate, do your thing. I don't want
Okay.
to interrupt anything. We had quite a few comments come in, all
All right.
directed to
Sorry,
you. So,
before we get to the comments, Sam, sorry to interrupt.
mm,
What I'll do once we get a trade, we're watching this very closely now. Once we get a trade on, if we get once we've sort of got that going, I'll go through all of my other charts with you, with the viewers, and we'll look at Forex, we'll look at the other stocks and some stock names. We'll also look at crypto, natural gas and oil, maybe uranium. It's one of my favorite plays right now. We can look at the VIX and the TLT 10-year yield. We can look at some of the softs and grains. So if viewers want to see that, we can go through that once we've got a trade going here. And I'm happy to go through what I'd normally do in my live streams with my own channel.
sounds really
Over
good.
to you.
Sounds perfect. Okay. I mean, do you feel like you might be taking a trade in the next few minutes? Should we keep your charts up, or do you feel like you might have to wait? Maybe I don't know.
I think in the next, so these are 5-minute charts, Sam. So we have a 5-minute gap every 5 minutes. So we've got 4 minutes until the next candle close.
Okay, then I'll load up my charts real quick, because I'm not seeing too much anyway on my end, but I might as well go through it. So let me just go ahead, share screen. Bear with me as I try and it's this one, share. And go back to StreamYard. I'm a bit slow with tech. Oh, there we go. Okay, beautiful. We're up. Not sure why the screen is so widescreen. I don't know. Oh, never mind.
Yeah.
Okay. Let
Wow.
me pull up the 15-minute 15-minute chart. So I am mostly based with volume, order flow. I futures trader. So naturally, it's all about just the numbers for me. But essentially, yeah, very similar to what James was saying. Obviously, just S&P 500. So, when he showed the S&P 500 as well and the NAS 100. So very, very similar charts as James said earlier. In terms of overall direction, very similar to you. If we break these lows, and I do think we're dropping a bit more, my next area would be around here. And this is just based on, price action from a long time ago. We're talking, we're I have to go to the 4-hour chart. I can find a nice little gap in volume right here. And it was a huge gap actually, which never got filled. So I'll be interested in that area, but this is back in September last year. Right. And I'm always a bit weary as someone who's, very quick. I say I'm a scalper, but generally it's not like microscopic scalping where I'm in 1 minute out next minute. It's more, 20, 30 minute kind of hold time on a trade. Right. But it's still considered scalping. And volume to me is very important. The more recent volume is more important. When I'm going back, many months in the past, okay, I'll still consider it. But more as an area where buyers might be interested in purchasing again there. I'm not seeing it as, oh, this is an area where buyers are currently in, right? There's anyone who took trades back down here, they're not in the market anymore, pretty much. Do you see what I mean? So it doesn't have the same kind of punch as if we're talking about, volume that happened a few hours ago, right? Okay, that will have a much more immediate effect, especially in the short term for me. And since we don't really have anything much apart from, this low that we had yesterday, apart from that, and that was just a, very choppy consolidation sort of area. I don't really have much data to the left of me to kind of base many decisions. So I'm quite happy that it's actually moving up. I do want to kind of see the market move up. So, I got all this price action to the left of me that I have so many different areas where I can, pick and choose, and I can definitely short the market, go long in the market in different areas. But as we drop down to these kind of historical times, basically, I'm a bit wary about trading those areas. So I've drawn up a little gap in volume here. We've literally just touched it. I heard my alert go off of my earphones and almost deafened me because it was that loud. We just touched it, I don't know, a few minutes ago, I think, as I was talking. Where was it? Okay, yeah. So literally I mean, it's the 5-minute chart, so maybe a few minutes ago we touched it. So this is an area where I would potentially be looking to short the market. I'm just drawing out where all the heavy buyers came in, right? So we had lots of heavy buy volume. This is a bit too big. I can make that a bit smaller. Lots of heavy buy volume coming right at the bottom here. We had another area of heavy buying happen here, you know, in two price levels right on top of each other, both over 1,000 contracts on the delta for the buyers. And that's a lot of volume. You know, standard kind of volume, you're looking at 200, 300, you know, sometimes you even get below 100. That's quite standard. So when you're seeing these kind of numbers being printed, it's good to definitely mark them out, take a note, because if I do get in a short position, this is going to be my first area of like a critical area where I'll be deciding what could happen. Because, for example, if I jump in a short position, I'm not going to jump in one right now because I don't see anything, but say I see something and I jump in a short position, all right, and the market moves down, it could very easily just reject off that area. The buyers come in, defend, add more volume to the market, and we just keep going up and create, you know, higher highs, right? That could very well happen. So if I am in that trade, at that time, I don't know if this is going to be merely a small retracement. Are we going to just start consolidating, or are we going to plow through? I have no idea what's going to happen when we get to that area. So I have to react in a moment. So it's good to draw it out and basically watch what happens when it gets there. What's the volume looking like? Are buyers coming in? Are sellers being absorbed? What is actually happening? And then I can base my decision whether I want to stay in the trade or get out at a small profit or break even or something, and you know, not risk anything too much. So I draw out the basically areas of heavy volume that happened very recently. Like this happened, what time are we at? 10 minutes ago, you know, this heavy volume. The buyers who placed these orders, they're probably still in the market, right? I haven't seen any indication that they've even exited the market, right? Because when a buyer exits the market, it prints as a sell order, right? So these were buyers entering. I haven't seen any real big orders from the sellers. So it's safe to assume these people are still in the market, right? And therefore, there's a lot of pressure still, a lot of buy pressure in the market. So until I start seeing heavy volume come in from the sellers, okay, that could indicate these people exiting, taking profit, right? Getting out the market, that pressure's, it's unlikely it's going to just start reversing, right? So you have to kind of wait. But in terms of the areas, this would be an area where I would keep my eye on, because it could be a potential area where buyers might want to exit, but they might not. They might just add more pressure into the market. And if they do, it will keep going up. And I'm not going to long the market this high up because we're in a risky area as well. So I kind of wait for the market to get to certain areas. And when it gets there, I have to base my decision on that. If we do plow through here, then there could be a potential for a trade of, you know, the typical comeback, retest, and continuation. That could be a potential. It could be a fake out, right? It could be a trap. You could see lots of buyers, you know, as we break this area, they all jumping in, right? Thinking it's going to go higher and higher, and they get trapped, and sellers come and absorb a lot of that pressure, and the market starts pushing down, and all these buyers are scrambling to get out at the best possible price, right? That could happen. That's a beautiful setup. I love it when people are trapped, because the market moves rapidly, right? When people are trapped in big positions and they're all scrambling to get the hell out, the market moves rapidly. So that's my favorite way to trade it, right? That's generally the only kind of setup I like to trade confidently. Things like retest, continuation, they do work, but and this is just personal preference. This is not me saying that doesn't occur or that's not a good setup. Absolutely not. It's just my personal preference. I don't know. I just feel more confident because it's the setup I always trade pretty much. So I'm just confident in that setup. And why trade something that you're not less confident in? Do you see what I mean? So I just use my preferred setup, and it usually happens a few times a day. So there's always an opportunity. But yeah, what I would like to see is basically, yeah, people getting trapped. So what I would love to see is buyers getting more confident. They've had a pretty, you know, nice little bullish move. If you look on the 15-minute, these are some strong volume candles. There's a lot of buying happening. There's a lot of money on the line. You've got to imagine the amount of millions that are right now just sitting in this market. Okay. You know, it could potentially be up for grabs, right? So you have to be mindful, where's the risk in the market? Who's right now risking a lot because they're going to be vulnerable. And if they're vulnerable, there's an opportunity. Some institutions might want to take advantage of them. Okay. It really is a game of like cat and mouse almost, you know, everyone's out to get each other essentially. So what I would love to see ideally is we, you know, maybe push up a bit more, buyers get more confident, add even more volume to the market. I'm talking maybe an extra 2, 3, 4,000 extra contracts on the delta, right? But the market refuses to go any higher. Sellers absorb it all. Okay. And you can just see contracts are being added. You can kind of see absorption happen right now. You can see, if you look very carefully, you can see contracts are going up, but then they very quickly reduce and the market pushes down. That's sellers absorbing buy pressure, but it's just not big enough numbers for me to take action, right? 400, 200, they're just not big enough for me, right? I normally, you know, there are bigger numbers that appear when you have a really good setup. So I'm not going to be pulling the trigger on any trade until I see high volume, right? So ideally, I would love to see it push up a bit, even more numbers. Like I said, a few thousand contracts added to the buy side, and then the market starts pushing against them, and you can just see, like right now, you see all this all these sellers. That's not new people jumping in the market. That's not new sellers selling right now. That is a lot of buyers getting out their position. They're realizing it's struggling to break past here, and they're taking profit. They're getting out, right? That's essentially what you're seeing, right? So you kind of have to read the momentum of the market, right? Don't always look at it as if it's green, it's new buyers, and if it's red, it's new sellers, because that's not always true. There's probably not many active sellers in terms of people actually executing like market orders, right now. There's not that many. These are more buyers exiting their position essentially. So that creates more of an equilibrium, right? So I'm not expecting the market to push down heavily or anything. It might consolidate for a bit, but we're just waiting for some side to get brave, pull a lot of money on the line, let it go against them a bit, and they all scramble to get out. Because if there's a high volume in the market and they're all scrambling at once to get out, that's when the market goes boom, 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 boom in the opposite direction. So that's essentially what I'm waiting for. I don't see anything just yet, but yeah. If I do see something, I will jump back on the chart and yeah, pull the trigger on it. So that's pretty much that. James, how's it going on your end? Have you spotted anything or?
Yeah, so I'm in a trade right now. In fact, you can still, can you put my charts back, or should I?
No, yeah, right there. You're back on the charts.
Okay, fantastic. So,
one second. No. Someone is controlling it from back. Okay, whoever's on backstage, you can control it. That's fine. Put James's charts on.
Oh, we got
thank you.
A crew.
You're up. You're up. Yeah, we have people managing the back, and then I interrupt them, and we do the opposite. So
yeah,
carry on.
Okay.
Sorry.
It's now blank. Well, maybe it's not. Hang on. Oh, there we go. Okay, perfect. All right. So let me show you what I've done. There's the trend line. This is the 5-minute chart. Let me quickly remind you of the 15-minute chart trend line. It's this one here. The shorter, sharper trend line, steeper one. We broke out through the trend line and pulled back to it, and actually below it right now. But I'll show you where I initiated my trade. So we got up through the trend line. We pulled back, almost touched the trend line on that previous candle. And on that pullback, because I've got quite a big spread on this account. So you can see a 298. I got like a, I don't know, $1 or $2 spread on it. So it's quite big. So I actually took it right at the bottom of that candle, but with the spread, it's slightly higher. And that's my entry level. I've just got one lot on here. It's a small position. This is my actual account at Pepperstone. and I'm looking to add on a break above there on a breakout through that order block. We broke out. We didn't hold it though. We didn't close above that black line, and now we're moving down. So it looks like I might be wrong on this trade, but let's wait and see. Now, if we break down through the bottom, I'm going to stop and reverse. And the bottom is this black line down here, not the bottom of that last swing, but this previous swing yesterday. So in other words, yesterday's low, actually. Let me just put that at yesterday's low precisely. So yesterday's low is a little bit below us. And if we break below there, I will sell 2 contracts. In other words, I'll reverse this trade completely and go short on a breakout and a pullback and a resumption only. And so I'll take my reversal trade on exactly the same setup, which I explained to you as if it were my first trade, my original trade. But now we're long. And yeah, we had a perfect setup, break up through the trend line. We did have that order block above us, which I warned about earlier, saying more cautious traders might want to wait. But I tend to think this market's bullish, and right or wrong, I'd rather get in slightly earlier, which I have done. And that's called bias, right? That's not good, but I did it anyway. But there was a technical breakout of a decent trend line. Trend line breakouts can be fake, false all the time. We know that. And now we've got a horrible looking double top on our hands. We've got to obviously overcome all of this stuff above us in order to keep going. On the S&P, we did exactly the same thing. S&P is actually a lot nicer, by the way, a lot easier. And I'll tell you why this is such a good setup now is because, yeah, there we go. The US 500 S&P. We got up to exactly that trend line and that order block. I'll switch to the 15 and rejected from it without closing above it. It's a good trend line, this one. It's a really decent, long trend line. So it's very solid. And we tested it and failed. And so we didn't get a long entry. It's also at the same place where that horizontal line is, which is also awesome. So we got right into that corner. Notice how often that happens. The horizontal line and the descending trend line form a little triangle corner, apex. And so often the market will find the apex of 2 lines like that, which it has done today, and did its job perfectly, kept us out of a bad trade, potentially bad trade. Now what we have is a really strong, super strong resistance area here. A break and close above there has a really strong probability of being a winning trade. So I'm happy that that's formed the way it has. So all is not lost. All is not lost on our NASDAQ trade.
Definitely not. Definitely not.
So, and what I'll do with the NASDAQ, the same thing. If we break up through that almost a tweezer top now, and there's a tweezer top on the S&P there. Tweezer top is a reversal candle. It's a strong resistance level. If we break up through there, I've got a position on already. I'll add another one on the breakout pullback, exactly as I said before. So breakout, pullback, and then a new position to add on to the current one, if we get that. At the same time that happens, we should get a similar trigger if it happens. I'm not saying it will, but if it does, we will get a similar trigger on the S&P, which then could put us into 2 long positions on the NASDAQ and 1 on the S&P.
Sure. Very interesting. Very interesting. I just want to mention my #1 fan, Robert. He's in every live session I do. He's here joining us, saying, I don't know how much time I'll have here to cheerlead, but I'm trying to pack to go visit the kids for the weekend. Robert, we always appreciate you being here. You know I do as well. But please go visit your kids, have fun. Absolutely. But yeah, always appreciate Robert being in the chat. He's a great guy. I'm going to quickly pop up my chart because there was something I spotted which was quite interesting. If you don't mind, I'll just add the stage. Let me make that full screen. So that area where there was heavy buying that I identified earlier. So the buyers did step in, right? So, but it did actually make quite a sharp move down, right? It doesn't look so sharp, but you can kind of see it better on the 15-minute. That was quite a rejection, right? And one thing that I've never really mentioned, I usually always show it on the 5-minute, but if you drop to like a different time frame, right, you can actually sometimes see things even clearer. So I do sometimes switch between time frames. So if I go to the 15-minute, you can see it clear as day where a lot of buyers took their profit, right? You had buyers coming in, 1,000, 1,000, so forth, 2,000. And then just up here, clear as day, we have two zones right here, two price levels, all with over 1,000 contracts sold. That is quite literally people taking profit, and the market naturally then pushes down because there's pressure being released. And as it started dipping back into this, yeah.
People are saying they can't see the screen, and it may be resolved, but quite a lot of comments there.
Okay, let me double check. We had this issue yesterday. Let me double check if it's looking. Okay, on YouTube on my end, it looks good. I think you can probably see it now, right? Back up on my end. Okay, perfect.
Okay.
Awesome. I think there's just a bit of lag. So if it goes black, just bear with us. I think it's literally just lagging. But yeah, where was I? This area here where we saw that heavy buying, the buyers decided to jump in again and now are trying to push the market up again. So it's really about reading, trying to figure out what is actually going on, who is who, kind of build a story. Imagine, it's a bunch of people, individual. Obviously, it's not just a few people, right? We're talking millions and millions of different decisions being made, but you can kind of categorize the big players, right, so to speak. And it might not just be one institution or one entity. It could be a big collective of people who have seen the exact same thing and are all doing the same thing at the same time. That's very possible, right? But either way, it's large volume in very small areas, right? Whether you want to see it as individual or a bunch of people, doesn't really matter. But try build a story about it. They came in, they entered, they pushed the market up. There wasn't much seller's resistance. They kept pushing it up, They took their profit here, got out the market. The market pushed back down as the pressure was released, and they're starting to enter again. Kind of defending. They saw that area is a good area to start buying again. It was successful last time. They're going to start buying again, essentially. And so, yeah, using different time frames can sometimes help you see it, because on the 5-minute, you don't really see that heavy selling or that exiting, the buyers exiting too clearly. You can if you're really, spot it. You got 800, another 500 here. And if you kind of add it together, okay, it kind of makes sense. Another 800 here. But sometimes it's a bit harder to spot. Whereas if you go to a different time frame, because it's a longer period, it consolidates it more into one area and you can see it then much more clearer. So don't be afraid to switch between different time frames just to kind of get a better picture, to see what's happening a bit more more clearer. But generally speaking, I do only use the 5-minute, but I do drop to different time frames. If I see something that isn't straight away that noticeable, I might drop to a different time frame and then you can see it just a little bit better. But yeah, I just wanted to point that out. Again, I'm seeing no opportunity. I mean, like I said, you could have earlier when I was analyzing before, I said, there would be a possibility, an opportunity to buy here, right? If it comes back down, to potentially buy. But I don't like, I generally don't trade like a retracement and continuation or retest continuation type setup. I prefer just to look for people being trapped. It works for me the best generally. But there are, you can use so many different setups. It's choose, kind of pick which one you like best, really. But it really is just a story playing out half the time. And as long as you analyze the story behind it and kind of, figure out what is actually going on, then you can make pretty logical and pretty good decisions based on that story, essentially. But until now, my setup has not yet occurred. So yeah, that's it from my end so far. Hopefully we have just over half an hour, 36 minutes left. Who knows? Anything can happen, right? Hopefully something occurs.
Sam, what is that CME volume footprint? Is that an indicator that you can get on TradingView?
It's literally, if you go to TradingView, you do need TradingView Premium, but they pretty recently released this, I think maybe a year back. It's called Volume Footprint. but you do need to subscribe then to the CME data feed. And you could do that through TradingView as well. I mean, it's nice that TradingView's entered that space and showing order flow, because before, trust me, some of the platforms you had to use to get this was a headache. I mean, it took me a month just to learn how to scroll the chart. I mean, that's how complicated some of these platforms were. So the moment TradingView offered it, I've jumped onto TradingView.
Oh, that's awesome. So can I just switch back?
Yeah, absolutely. Let me do that for you. You should be up.
Yeah, cool. Thanks. So you're just showing it. So it's not one of the indicators. It's under the chart type in this list, right?
That's
and
it.
You can. It'll only show up here if you're subscribed.
Oh no, you've got it. Volume footprint. There you go. Yeah.
Oh,
I mean, you could click it, but it will show 0 because it wouldn't have the data to fulfill it at the moment.
Oh, hang on. No, it's working.
But it'll be all 0.
I've got a.
Oh, you do have a
futures. All sorts of. I pay through my ring for all of this stuff, so I'm glad I've got it. Yeah. Oh, I honestly didn't know I didn't know this existed. So
there you
isn't
go.
That cool?
Amazing. That's really cool.
Yeah.
I mean, it's worth having a browse every so often. Especially as a confluence.
I'll have a look at that when I get a chance.
Yeah.
But have I messed things up here? No, this is all okay.
That's looking good again. There we go.
Yeah, so here we are. We're above the trend line again now, which is what we wanted. That's the first. And notice that we're above all of the moving averages. The orange line is the VWAP. Now, I know a lot of traders like using the VWAP or the anchored VWAP. It's like a new thing. Everyone's into it. It's fine. It's great. Moving average is a moving average. It's just there is, in my opinion, moving average crossovers and MACD divergences, all that sort of thing. It's fine. I mean, it'll get you into a couple of good trades. It'll put you into a couple of bad trades. It's not really good. There's not much to it. It's just old data, which is being transformed into a line. But what I do use these moving averages for, and a lot of traders, day traders in the stock market use the VWAP. VWAP, it's another form of moving average, really, is just as support and resistance. So when you look at these moving averages, the orange one's the VWAP. There's the 50 is the red one. The 20 period is the blue one. Simple moving averages. For me, they're just support and resistance. Now we've broken up through all of them, including the 20, the 50, and VWAP. And we want to hold those now that we've regained them. And we want to hold that trend line. So these next few 5-minute candles are pretty important. We want to consolidate those gains, first of all, off the bottom, where we did have an oversold stochastic with stochastic divergence showing here. We got a lower low on the price chart, but a higher low on the stochastic. The bounce off the bottom, which was just fractionally above yesterday's low and above that black line. And we've now, so we managed to do that. We managed to get the thing, the trend line, the order block. We then failed back beneath it, but bounced up with a spike low and holding those. We really want to try and hold this zone right now, having done all of that hard work already. And whether we will or won't, who knows? I think we probably will or can. Same with the S&P, just dipping back down below VWAP, down below the 50. There's the 20. Now, if we do get a reversal somewhere here in the middle, that wouldn't have put us into a trade. We've already got into the trade based on the breakout through the top. Not waiting for this order block and this black line. As I said, I was a little hasty, but I'm more likely to be hasty than slow on my trades. Sensibly hasty, I think. But notice how both of them bounced off with a divergent stochastic. So that's really good. That's formed a good technical base for this rally. And we've also regained, we're failing there now. Let's see how this candle closes. We've still got another minute. But we've regained at least the 20 period moving average on both of these. We've still got the VWAP and the 50 just above us. And we haven't reclaimed that trend line properly just yet. So all of these things are very messy, choppy market, as you can see. And that, as I said, that's going to characterize most of this year. Look how similar today is to yesterday. Yesterday, we didn't have the NFP jobs data. Today, we did. But yesterday, we had the jobless claims number, also jobs related. See how important jobs are at the moment to the market. There's the jobs reaction. There's another jobs reaction. We know that the Federal Reserve is obsessed with the jobs right now. Inflation, jobs, economic slowdown, GDP, all of these numbers, economic growth numbers coming out of the US. They want to see all of that firm, but they don't want to see the jobs market collapse. And they're very, very sensitive to it. And so is the market as a consequence. And you can see it on the price chart. You don't need to know that. You don't need to be a fundamental expert to know that jobs are pretty important. You just got to look at what happened every time a jobs number came out. So that's where we are. And the market now has to decide whether 150,000 jobs added to the payroll with 20 negative on the government payroll, if that's good enough for this market to hold up. And with the idea that the Fed might be tempted to cut rates earlier rather than later, or if that weak jobs number just indicates we've got a terrible economy on our hands and the market needs to go down. And that's the sort of what the market's grappling with right now. And right in this minute, in this second, the market thinks it's not particularly good news as it's moving down. But earlier during this whole period, we've seen optimism, pessimism, optimism, pessimism. And right now, unless we bounce, we're probably looking a little bit weak. But look back to yesterday. Look how many times we moved up and down within that range, forming this kind of diamond pattern. Many times we got back down, went back up, down, back, the whole day basically. And we might just do that today until the weekend, and maybe until the crypto summit later tonight. And maybe that'll spur the markets off in one direction or another.
Who knows? Who knows?
But we are in a trade, and at least that's something.
Are you still active? Oh yeah, you are still active in the trade. Yeah. Sorry.
Yeah.
So
what I'll do with this NASDAQ trade, what I'll do with this is it's only one lot. It's a very small position. But what I'll do with this is, if it does break down and close beneath this line, I'll give you a precise number. It's at 19,950. I'm going to call it 55. If we close beneath below 19,955, I will reverse this trade and go short. What I'll do is I'll sell 2 lots instead of taking a stop loss. I'll sell 2 lots, hedging the first one and adding a second one to the short.
So I've just taken a position a few minutes ago, so I'm going to pop up my chart real quick. It moves very quickly, and yeah, I have to watch it at the same time. Cool. At the stage. Okay, so I took a short position very quickly. We are already at an area where I'm a bit, a critical area, so to speak. Let me just have a quick look. So the reason I took it is I started, especially on the 15-minute, you saw it a bit more clearer. I can already, again, my stops never get hit. I would never allow my stops. I can already see buyers starting to defend it. So let me just drop down and I'll explain it a little bit better as...
Sam, your screen is blank.
Position. Oh, damn it. Just give it 2 minutes. Resolved. Let me...
No. Oh, well, hang on. Maybe it's on my YouTube, it's blank. And
okay.
Oh, okay. It's up now. Yeah, got it.
Oh, it's up. Okay, cool. So yeah, I took a short position just because I saw some buyers get trapped up here on the 15-minute. But it could be a very, very quick one because there was a lot of buy pressure. I do feel these buyers are going to start defending. They already are. You can see them coming in. So it might be... Yeah. It might be one where I have to very quickly get out, depending if I can already see them coming in quite strong. So when it come in quite strong, my overall get out would be if we break above these heavy sellers here. If we're struggling to, push it down even more. I knew this area is going to be, defended by the buyers, but I'm going to give them a chance. The sellers might be able to, push through, give them a little bit of a fighting chance. Don't be too rash with it, but I am seeing, buyers coming in, but that doesn't mean necessarily that they're going to win. It just means that there is a bit of pushback, so to speak. But the reason I got in, I'll quickly change it because I want to show you guys a bit clearer. Was these buyers getting trapped? 1K, another K, not the greatest amount of volume, but there was good enough volume. And as we move down, you saw them exit here. I'm trying to take advantage of their pain quickly. I know this area is going to be, if we do break below this area, then we've got still this area where they could potentially defend. If we do break below that, we could be seeing getting new lows. But again, would I hold it to my take profit? I mean, this happens so rarely. For me, I rarely ever hold it to my take profit. I'll be dead honest. Same with my stop loss. Like, my stop loss is technically above here, but it's not going to happen. Like, if we get above this 1,000, I'll just have a quick look. If I'm seeing that the buyers are quite strong, then I'll just get out manually. So again, never really allowing my stop to be hit. It's just there purely, should there ever be some kind of freak thing that happens where the market just shoots up or shoots down, you want something to catch you quickly. That's literally what the stop loss for me is. It's not, I can see the buyers getting in.
Yeah.
It wasn't really that strong in volume. I'll give them a few more seconds. They're coming in quite
Sam, that's a great idea. A lot of traders will be saying, well, why haven't you put a stop loss in there closer to the price? And there's a very good I don't put stop losses in myself close to the price either. There's a very simple reason for it. I don't want anyone to know where my stop loss orders are, or my buy limits, or my sell limits, or sell, any of my orders, limit orders or stop orders. And because I know that brokers cheat and they do it all the time. And no, I mean,
you're right. You're right. You're absolutely right. Of course, of course.
And particularly when you've got, when you're trading quite a lot of money, they cheat even more. And I've got quite big accounts, and I just cannot afford to show my stop loss. But it is a good idea, as you've just pointed out very eloquently to everyone, to have your stop loss set somewhere. Maybe you've got an ultimate, like, emergency risk limit of 5% or 2% or 1% or 3%. And you can put your stop loss there, not ever intending for the price, as you just said, to reach there, but it's there just in case of a catastrophic market move in one way or the other.
Like, in my account, like, you never see the green or red, when like stop loss hit or take profit. Like, I think out of maybe 100 trades, or say like 100 successful trades, maybe I'm probably honest, probably like 3 or 4 have ever hit their take profit. And that was just because it was I don't know, sometimes when you get in the trade, it just works so well in your favor, and it just keeps going and going and going. And you're like, this is the greatest trade ever.
Yeah.
9 times out of 10, that never happens. Like, there's always going to be a chop. And part of like if you're a swing trader, of course, you don't have to really care too much. You're looking at the overall long term, right? But with me, I would counter trend trade. Generally, I like to be with kind of the trend a little bit, but I would happily counter trend trade. Direction to me isn't the, long-term direction isn't that important for me, because it has an effect, sure, but it's not, like I said, and when it comes to risk reward and things like that, it's more, I know technically if you're getting out the trade before, how can you ever calculate your risk reward? It's more down to, like, realistically, when I entered this trade, I entered it, I can see on the 15-minute, I entered it here, right? Where that 1,000 was, right here, right? If it started pulling up and I could see buys, I would have got out immediately, right? Because sometimes you do jump in and you can very quickly see, no, this ain't gonna work. I was too hasty with it. So the stop, like you said, is more just, I don't know, say the internet goes out and I can't get on my charts, and that has happened before. Like, genuinely, that has happened to me, where I lost connection and I couldn't manage my trade while I was in a trade. And okay, luckily my stops didn't get hit, but if it got really bad in that situation, my stops are there to, you have to have something set, right? You can't, freak occurrences can happen. You need to have that absolute stop, right, to protect yourself. But that's literally what I use the stop loss for. But in my mind, I have an area where I know 100% no, I'm getting out. And yeah, that's pretty much it. I think Sam, we're going to see a bit of consolidation. Sorry,
mate. I carry on if you want to. I just said, well, in the next 5 minutes or 10 minutes, do you want me to quickly run through some of the other instruments that I'm looking at the moment?
Absolutely. I'll add
Okay.
your chart now. Okay, you should be live. Let me just double check everything's working on YouTube. If I feel like there's a bit of lag when we switch charts and it takes a minute or so before it appears. If that is the case, maybe just hold off explaining just for now until everyone can see it.
Alrighty. There we go. That seems to be working.
Yep, it's working on my end. Perfect. You can go.
Okay, so on currencies, very quickly, obviously the dollar has collapsed through the floor. Just in general, the dollar index has probably got to have a bit of a pullback. There's the 200 period moving average. We broke down through it. We've had no pullback, no retracement. And like every other market, one would expect a pullback at least to the breakout point, which is the 200 period moving average. We're currently trading at 104, roughly 103.70, and the moving average is at 105. So that's 100 pips above us. We could get a 100 pip bounce here on the dollar and then a resumption of the downtrend. This is a similar sort of scenario on this upward move. See how we broke through the 200, got back down, bounced off us and carried on. So I think we'll see a bit of a pullback in the dollar down upwards, and then a resumption of the downtrend, which means that the euro, the pound, the dollar, the euro and the pound have to both come down a little bit, probably 100 pips or so. And if you look at the euro on the hour chart, it's already formed a tweezer top there. It's looking good for a short right now on the euro. And I'm sure my favorite man, Walter on X, will be pleased about that. He's the euro bear, perma bear. So there we have a reversal tweezer top on the euro. Looks like a short. I'm already short on the euro yen, and I think we'll see a pullback in the euro and on the pound and a rally in the dollar yen, all about 100 to 200 pips. And I think that's what's probably on the cards today or early next week. We're talking about stock markets right now, so let's not cover that. I think we could get a bit of a bounce on IWM on the small caps. I'm looking at that one today. If we get this market moving up, and if there is a sense that Jerome Powell may cut interest, if that, that sort of meme or idea starts moving around and people start saying, well, maybe we'll get a cut in May, or maybe, maybe it'll be 0.5 instead of 0.25 the next cut, or whatever. And we'll start to see these small caps gaining a bit of strength. They've been pushed down quite a lot. So I'm quite interested in that one. I have a long on Tesla, the worst, most beaten up stock so far, but and everyone hates Elon and Tesla. I get that. I don't like EVs myself personally. I don't have one, and I don't ever intend to get one. But I do think Tesla has an interesting, if not tumultuous, future. Not in cars necessarily, but I think we've got SpaceX going on. Somehow all of this is part of the same story. SpaceX, Neuralink, Tesla self-driving robot cars, and there's one other thing. And the Tesla robots themselves.
Yeah.
I think those robots, I'm going to get one. I promise you, I'm going to get one as soon as I can. Yeah, absolutely. So, and I think there will be millions and millions and millions of those things sold. But that's kind of a longer term view. And I think Tesla, anyway, the point is we're around about the 200. We're at the trend line. We've come down all the way from 500, just under $500 down to 260, almost a 45% pullback. I think we could get a bounce here on Tesla, taking a little bit of a stab at that one. I'm also long on Coinbase, as one of my good and long-term members at my private group tells me. The people that made the most money during the gold rushes of various sorts and different countries were not the gold miners mostly. Some of them obviously
shovels.
Yeah. So that's what Coinbase is. It's a Bitcoin shovel. So we'll buy that. And then Google, I'm interested. I'm always interested in Google. But I think we could get deeper into this order block, maybe a little lower on Google. But I'd like to buy some of that too. I don't hold long-term portfolios. That's not my bag. I like to swing trade, day trade, and I make much more money from trading than investing.
Can I ask? So the stocks you're talking about, Google, etc., Tesla, Coinbase, Nvidia, whatever, right? Are you day trading them on your brokers as like a CFD, or are you actually buying the stocks?
No, I trade these at the broker. And so it's more expensive to trade at a regular broker. I've got decent spreads on my broker at Black Bull, but not great spreads at Pepperstone. But so yeah, so it's more expensive, but there's more liquidity in general. In not in absolute terms, but the ease of getting in and out of a trade is instant. You don't have to pay for shorts. You don't have to do any of the weird stuff that you have to do when you're trading actual stocks with a brokerage. You don't have to declare your trades and your holdings, or there's so many different things. So I just literally day trade at my broker.
Interesting. Because I've only done it. I'll be honest, I've only done stocks once, day trading, and I made the newbie mistake of not actually figuring out how much is this going to cost me to trade. Entered positions, and the commission was ridiculous. And, I was like, what? I never traded them again. I never even bothered to look at them after that. It was such a negative, because I actually traded it well. And I was like, I should be in profit. What's going on? And I checked the commission. It was like more than my trade.
No, I mean, I don't pay any commissions. I've been with my broker for a while now, and I don't pay commissions, and I'm associated with them, affiliated with them. So, but nevertheless, the spreads are not great. If you trade actual stocks, buy and sell real shares, there's almost no spread, if anything. I mean, there's a tiny commission. That's it. So
interesting.
It's just the way it goes. Now, Bitcoin and crypto and so on, well, everyone's got their own opinion on this. I remain bullish on Bitcoin, Ethereum, XRP, not because of what's going on with the Federal Reserve, not the Federal Reserve, the Treasury potentially holding, but I've been long on Bitcoin since the Trump rally. In fact, I started buying Bitcoin. I've never really been a Bitcoin trader very much, a little bit here and there, but I bought heavily in this zone here, and I'm using all of that profit to hold on to my current trade. Now, I may lose a lot of that. I don't know. If this goes down, I will just we'll be back to where I was, and I'll have lost quite a lot of money. But I'm not risking my own money. I'm risking money that the market gave me, and I'm willing to give it back on this one gamble on Bitcoin. I know that sounds a bit freaky and weird, but that's the way I view it. And I think
it's a good way of thinking about it.
Yeah. So I'm particularly optimistic about Bitcoin, and but that might end up being my downfall. I don't think so, but that's the way it is. So all of these look pretty good, and I'll start. So Bitcoin, basically, all of this flopping around is to be expected, and I really do. Apart from that second spike yesterday, I really do like this pattern of the clear out, massive clear out all the way down to 78, then the relief rally back up to the trend line. And then everyone who got long at the bottom got out. Everyone who was long higher up was hoping for this to carry on, and we're holding on, no doubt, desperately. And when it collapsed all the way back down to under 80 again, actually not quite, around about 80, 81, all of those folks were also cleaned out. So we've cleaned out so many traders, and most of those traders that were cleaned out in these spikes down entered the market in less than 6 weeks ago. 90% of the losses that took place during this occurred from people that took trades during this rally up to new all-time highs. It's amazing, absolutely amazing. When we broke up through that previous all-time high, everyone got long, and now all of them, every one of them, to a man and a woman, just about, has been cleared out and have lost their money. And only the people that have bought much lower down, and the hodlers and the believers and the crypto fanboys and girls, the weirdos and the freaks, they're all holding on. Good for them. I think they're on the right side of that market. I do like XRP as well, not only because it's been proclaimed as part of the Treasury setup, but this trend line is absolutely beautiful, and it's holding. Apart from the crypto, the Bitcoin dip, and this hardly dipped, and it had this massive rally, and we're still holding, not quite, but I could adjust the trend line slightly down, and we're holding that trend line, and I think that's great. I think XRP is going to $5, Bitcoin to 160, Ethereum, I think maybe back to $5,000, $6,000, $7,000, something like that. So I'm pretty bullish on all of those. I don't have any positions on metals at all right now. We've been long and short gold variously over the last period, but I do think it's got to come down to one of these trend lines. I think we can get down to 2,820 or 2,720 into these order blocks. It's very overextended, overbought. There's a lot of momentum running out. You'll see divergences all over the show on the stochastic RSI, MACD, all sorts of things like that, indicating this should come down. However, I'm not convinced. If it's going to come down, it's got to be like now at this apex. Remember, I talked about these triangle intersections. They're always key. We've come up underneath it. We haven't managed to get back up through there again. So could we get back up through there? Of course. Could we fall down back down to these trend lines, moving averages, order blocks? Of course. Which one's going to happen? I have no idea. And so I'm not in any trade. I'm going to wait for the market to show me what happens next. I want to see a big daily or weekly or 4-hourly at the very least candle to show the way. Same with silver, same sort of thing. We did reclaim the trend line on silver. I think silver is going to $60. People poo-pooed me, ripped me off all over the show. That's my target for silver, $60. But I think it's going to take some time. But I'd say in the next year or so. That's my feeling. And that's it on all of those. This is the Bitcoin futures at the CME. There's the CME gap that we had to fill by pulling up, retracing another little gap there, which we filled. No gaps currently. We may have a gap this weekend. Crypto Summit coming up. I wouldn't be surprised if the CME price on Bitcoin 1 shriek, which is what the exclamation mark is called in mathematics. That number, that little exclamation mark after 1 is called a shriek. And if Bitcoin 1 shriek manages to rally up dramatically over the weekend, we'll get another CME gap and we'll open up on Monday higher up. And we'll have to close that gap and then bounce up from there. So don't rush into it. If we do gap up over the weekend, wait for the closure of the CME gap. Probably back down to these moving averages and this confluence here, which would be perfect. Back to the top of the 20 and the 100-period moving averages. I think that would be excellent for another long entry for me in any case. And then natural gas, the one that everyone loves to hate and hates to love. We're short on natural gas. Just to quickly update for those who are following me on natural gas, I know people ask me every single day, several times a day. We're still short from that. We've got a tranche there, a tranche there. We're moving down without any conviction. We're bouncing off that 50-day move. It's a 4-hour chart, sorry. 50-period moving average on the 4-hour with a spike candle. I don't like that. We are in profit right now, just about, because we got a 1 in loss, but 1 in more profit from the top. And yeah, I'm going to watch the next 4-hour candle. If we don't manage to get down below there, I'll probably close this trade and take what little profit we've got. Just to let you know my thinking. We're also short on WTI oil. We've bounced off Moab, the mother of all breaks, this big zone beneath us. If and when, and I think we will break below here. We've tried it, I don't know how many times, maybe 15 so far. And I've been short on oil for about 2.5 years now. Every time we got up to these levels, I've not taken a long trade in I think it's almost 3 years.
Wow.
We've been short for 3 years on oil, and I'm still short. And we have not now exited at the bottom like I normally do. We didn't close at the bottom. I'm holding this trade for a break, a sudden, dramatic, and decisive break below Moab down to the bottom channel line. And that's down here at about $55 per barrel of WTI, West Texas Intermediate.
Petrol prices still continue to rise here. So, you know,
really?
they're not going down with the market. Let's put it that way. They're not
crazy.
You know.
Yeah, that's
getting
tax,
ripped
right.
off here. Tax, yeah.
Yeah. All right, we've broken down, folks. We got down through these levels. Sorry,
oh wow,
I got distracted.
Let's have a quick
All right,
look.
so I'm going to wait for a bounce back up to the underside of this channel, of this black line, and I will then sell 2 lots of NASDAQ. I'll also wait for the same on the US 500, a bounce back up to that line, and I will sell 1 lot. Actually, I'll sell 4 lots of US 500. That's equivalent to 1 lot on the NASDAQ. So all we're waiting for now is a bounce back up to that line. You're probably in good profit there now, Sam.
Well, I exited my position.
Oh, well, there you go.
This happens. But it's fine. Like I said,
Did you get out at the bottom? At the support
I got
line?
out. Yeah, pretty much. I got out where I thought that I did not expect it to blow through that easily, to be honest. I'm trying to look at the orders, see what the hell happened. The thing is, you also have something called iceberg orders, and they're a bit harder to spot. It's when institutions break up their orders into loads of smaller ones, and you kind of have to you have to kind of do a bit of mental math to figure out where they. It's a bit harder to spot, but a lot of time that does happen. Or it could just be that the buyers here they're already out the market. They have no interest in buying. They felt like it just didn't work out for them well enough. And I mean, overall, the market has been bearish for the last, I don't know, the whole week almost, hasn't it? It's been bearish. We had one little on Wednesday. We had one little correction, but apart from that, it's been a pretty bearish week. NFP came out as well. Wasn't too good. So all in all, I think adding all those factors into it, yeah, I think people are more likely to short the market than buy it. And that's basically what we're seeing. Buyers are they don't want to be stuck in this. But yeah.
Well,
I missed my trade.
What we have now. So what we have now, see this green blob that I've got drawn here on my NASDAQ day chart? That was my target for, we got there maybe 2 days early, but pretty accurate. Right. And that was my target for shorts. We have been short on NASDAQ, but we sort of reversed around this level. We're looking for longs now, but that was my target. We've now reached it. So we're not, the bulls are not doomed just yet. Let me put it like that. No. Look how long this channel is. Look at the length of that channel. This starts in 2023. Yeah. So
I mean, look, the NASDAQ, S&P 500, long term, if we're talking, they're generally going to be bullish. So I think you're absolutely right. Anyone who's panicking right now, don't worry. I'm doubtful it's going to be a massive market crash or anything. I think you said it best right at the beginning. It's just almost like a correction, right? It's not.
Yeah.
Well, I mean, anything can happen. It's hard to predict because anything can happen, and you have to always remember that as well. But I'm not like worried that this is going to be, the next financial crash or something.
No, sure.
This isn't 2008.
So, yeah. Well, I mean, it could. So this is the S&P. It's only we're only 7%, 7.5% down from the top. It's not even a correction yet. The NASDAQs are down about maybe 11% now. But look where we've got to on the S&P. I've had this line drawn in here maybe for 1.5 years. This green line across the screen. It's a super strong level. Not only was it a previous resistance, then it became a support, resistance twice, support twice, and we're right back there now. And we're still at and around the 200-period moving average. The fact that we've broken down below it isn't good, not at all. But the day has not finished yet, and we have not still closed. We have not had a daily close beneath the 200-period moving average. And if we bounce back up from this support level, which is a super critical level, and reclaim that 200 by the end of today, we will still have not closed beneath it. So one should always judge the outcome of a day at the end of the day and not halfway through the day. Same thing with the NASDAQ. There's the bottom channel line and this big order block here, massive. It's also a market structure level. So it's the top of a market structure breakout higher. And look how long this trend line is. It's this channel. You don't get channels this long very often, and this one is just super long. And we've come right down to where I thought we would before a bounce. We're incredibly oversold on the chart, on all the time frames. We're at key support. We're at the channel bottom. We haven't closed beneath the 200-period moving average on a daily basis yet. Maybe we did yesterday, actually. Did we? Yeah, we did. But we didn't close beneath the tweezer bottom on either of these charts. So, yeah. But what I have to do now is I actually have to go short now. If we bounce back up to that line and we manage to sort of reverse underneath it, I'll have to go short on the NASDAQ. But if we reclaim that line and hold that line, I'll add another long position onto my NASDAQ trade. And at the same time, once again, I'll do the same on the S&P. If we reclaim this line, maybe rally up through it, bounce back, retest it from the top side, then I'll add a long S&P trade as well. So then I'll have my same setup. I'll have 2 longs on the NASDAQ, 1 on the S&P.
Nice. It's funny because the the area of support you had on the S&P 500 that you said you drew a long time, 2 months ago or something. I have the exact same area drawn on my chart, and you drew it based on like price action. Looking at chart, I drew it based on volume. So it's quite. I just found that quite interesting how it's like we come to the same conclusion through different methods as well.
So you're talking about this is so I can see that you'd see that on volume as well, Sam. This would be your like most traded zone, right?
Yeah.
Yeah.
But
So
yeah,
I
awesome.
mean that's really important. That's a really good point. So the most traded zone where you see the most volume, the most activity, you can see it on the volume, as Sam said, but also on the chart. You can see we've tested it there, tested it there, tested it there, tested it there as well, and broke through, tested it there, and we're testing it again. So it is a highly traded level, high volumes, lots of activity there, and we're right back there now. It's exactly where we should be. It's like a mean reversion. We've just gone back to where everyone knows where they feel comfortable, where they know where the market's at. They know it's the most traded zone. Everyone knows these numbers. They've been trading these numbers time and time and time again, and we're right back there now. They know what to do. I think that's buy.
Yeah, absolutely.
Yeah.
James, we have hit time. We've done exactly on the dot. Pretty good timing.
All right, just to before you finish there, Sam, look, we're coming back into the range on both of these, or it's S&P to start with. So I think we'll be okay on these trades. Remember what I was thinking of doing was waiting for a breakup back into the range, a pullback to the top from inside, and then a continuation. Same on the same as the S&P on the NASDAQ.
Nice. Really cool. All right, guys. We didn't get through the comments. We do apologize. I'm going to see if there's any urgent comments. Concurrent price actions mirroring the historical pattern. Yep. Okay. Luckily, we didn't have any like questions or anything. It was more just showing love and support. So we really appreciate all your comments. Everyone watching, do stay tuned. We've got the midday momentum coming up in 15 minutes. But that's it for me and James. Thank you, everyone, for watching. We'll see you again in another session. Thank you all. And thank you, James, as well.
Okay. Thanks, Sam. Thanks, everyone. And look at these charts, guys. There might be a big opportunity to buy NASDAQ and S&P if this works out.
Awesome. Thanks, everyone.
Ciao.
Hello.
Hello, Paul.
How are you, my friend?
I'm okay. How are you?
Well, a bit trepidatious about what's going to happen over the next couple of hours with announcements and stuff for crypto. So let's see. That's why I've got some coffee to keep me going.
Excellent, excellent.
How about you? What's going on?
I'm okay. Just try to relax. It's a last day of the week, so I try to be.
Well, I need your help with something a bit later. For
course.
sure. A trade I was looking at for last night. I was talking to yesterday's session with Howard and Gianni. We were trying to wrestle with a simple directional trade with Litecoin, and I decided to try and put my money where my mouth was. So we can have a look about that a bit later.
Yes,
What have you
together,
got
yes.
for us? What have you got for us today? What's going on?
Okay, so we can start maybe to share the news because we have NFP report today. I will just share the screen just to start from the news. I hope that you see right now. So today we have a non-farm employment change. The expected value was 159K. It was 151K. It was worse than expected. And of course, unemployment rate increased 0.1%. Right now it's a 4.1%. So this is bad news for US dollar. And whole market was, I can tell it was very quiet. And I started to analyze previous data about the price. And based of my analysis, each time when unemployment rate is worse than expected, usually that day we can achieve more than 1% gain for the euro dollar and British pound dollar. However, we were on resistance today for major currency pairs, and I was skeptical. Today, I was act a little bit like a beginner trader. I need to admit that. Why? Because I had a trade, then I saw the news, then I closed my trade, then I start to think again, then I enter in position again, and like a little girl I was this day, and this was not good for me, of course. So we can go on charts, for example, just to show you right now what's happened there with the major currency pairs, because this is the major news for US dollar pairs. So, for example, right now I'm watching British pound dollar, and as we can see, the price little bit oscillates. So we have the high around 1.2945. We achieved this level today in the Euro session. However, during the pre-market, we had 4 bearish candles. Even the candle during the news was a bearish candle, and it was a little bit tricky for me, because usually when unemployment rate is increased and everything is bad for US dollar, bearish candle, I didn't see something like that. I think last 5 years I didn't see this example like now. And now we're trying to go up, but still there's no push to higher price. And later when we start to discuss about this, Paul, I will just share you, because I have some algorithmics. It was some kind of AI using machine learning, past data, and try to predict, will we have the new high or low today or not? This is the classification model that I use, and I will just show you to see how today we don't have neither low neither high. It's a really messy data for a quantitative way of thinking. And of course, on the chart, as you can see, British pound dollar. I will show the euro dollar too. Just
yeah, let's get that up.
just
I mean,
see.
the Fed chair Powell is still to speak. He hasn't spoken yet today. And I think
Yes,
people will be
I
waiting
think
for that.
yes, we will wait for that. But usually, when this kind of data appears, they try to be some kind of hawkish report or something like that. They try to make quiet the audience and crowd. So I don't expect nothing special from this speech. However, I need to monitor that to see what will happen.
Yeah.
But right now, I just put this yellow circle just to see if we just watch technically here, we have a 1, 2, 3 price rejections. And it looks like there is a probability to price start to go down even after this news, because technically this not looks so good for more bullish gains. And I'm a little bit confused because I didn't see really long time this kind of the market behavior after this kind of news. And of course, I have some small trades. I'm on bearish side because we're really overbought right now, and I see that that resistance holding this. But like I said, maybe the smartest decision today is just to be flat. So I think it looks like that, but we will see what will happen. Please, Paul, tell me what is situation in your yard.
Well, this is all of this is all. I mean, it's all part of it, because obviously, you know, I would always be watching Jerome Powell speak before they go dark until we get the meeting in a couple of weeks' time. So I would always be paying attention to that. And I think in my space, this kind of hesitation and confusion is just everyday crypto trading, because, you know, you'll have one project, you know, being hyped one day, then you'll have a news thing, and then there'll be a lawsuit, then there'll be, you know, it's all plus the usual things. So it's all, I mean, for me, when I'm dealing with this, when I'm looking at that chart, right, and it's obviously just the 1 hour, but I always try and when I'm trying to figure out what's going on, I always try and step back and look for that bell curve, that basic market cycle bell curve, right? And it's been such a strong move, you know, for it to come. I feel like any kind of long positions here needs a lot more confirmation, and I would be probably quite bearish on this. Just stepping back, not knowing anything other than just the basics. I mean, is that kind of how you feel at the moment? What do you need to see for more upside?
I need to see first for upside. If price start to go upside, I will not enter into trade, because I know in several books that I read, they said never buy Friday's high, never sell Friday's low, because if we make statistical, just to do that statistically on some expert advisor, very bad results we can get. It's my just statistical experience. So in this case, if price just start to go up, I'm flat. I will not do anything. However, right now, if price starts to go down, maybe I can take some small sell positions for euro dollar or British pound dollar, more British pound dollar, because the euro is a little bit stronger right now. Maybe I will take that. I have already one position. Maybe I will add a little bit more. But like I said, I think that really we need some kind of the rejection here. We need some pullback, because if we want a healthy trend, the healthy pullback is very good. So so I want to see that on the chart, not more bullish trends. And how do you see that?
No, I agree. I mean, for me, I mean, I would if I was going to enter a short position, which is I would wait until it's kind of pop back down into the range, and I'll just the classic bearish retest would be, you know, just obviously just on a basic level, I'll look for confluence. But what we've been discussing, me and you, all week, right, is like there's so much going on, complete insanity. We have tariffs announced one day, the market reacts, and then the tariffs are taken away, and this process is just repeating every month. And how can we possibly, operate in that environment when it's just constant whipsaw of the news, and then the market will just freeze, as kind of a lot of the Bitcoin is doing, and what you've just described is happening here. And it's just, I mean, we don't want to be talking about this stuff. We don't want to be talking about trade wars. We want to be talking about patterns, why can't, all of this. That's what we want to be talking about.
Yes, you're right.
I mean, could you had the you stole my the news, I forgot what it's called, Cryptocraft calendar. Could you just bring that back up for us?
Calendar, okay. I will.
Yeah,
I'll just.
It's got everything today. It's what a crazy day. I mean, you look at everything which has come out, in terms of employment and all that kind of stuff. But then look what's to come, right? We've got President Trump speaks. President Trump speaks again. We've got the Fed Chair Powell. It's just like this today is going to be an absolute roller coaster, and how the market reacts over the weekend, in terms of crypto, because obviously the weekend in crypto is quite stagnant. Typically, it's not a good advice to really trade it over the weekend. I always say to students that just wait for Monday to settle and show you what the week's going to be like, and then look for Tuesday. But with all of this going on, I'm like, we're going to be in for a roller coaster ride. But I think the question most people will have is, what's going to be the impact of anything coming out of the crypto summit today? What's going to be the impact? What's going to be the impact of Fed chair? And honestly, all I can say is that the people who are, institutional investors are smart people, and they will read an executive order out of the White House, and they will be looking for substance. They will be looking for meaningful, not aspirational things. Now, we are starting to see some movement with all this high impact data today. So it will be, there are movements that they're taking movements in terms like the U.S. Secretaries and Treasury the U.S. Secretaries of Treasury and Commerce are authorized to develop budget neutral strategies to buy additional Bitcoin for the reserve. Now, these are quite ambiguous statements. And when you're talking of a strategic reserve, I want to know, what's the strategy, right? I mean, what's the plan?
Yes. I just want to add something that a little bit worry me, because there was a special interview with Powell, and where I think they get that interview to Reuters, if I remember. It was today, a few hours before, and I saw a tone, because he saw new risks that these global trade war can create price pressures, and hints public expectations, and he is very pessimistic in that interview. I don't know what will be in the speech, but in that interview, he was very, very pessimistic, and he sees all of that as some bad way for the U.S. Central Bank. And I see that he's a little bit against the President Donald Trump and his movements and everything. So I don't like that. I don't like that, even that it's not economy itself. I don't want when people start to quarrel to each other, and I think it's not good for the market, because that can bring new volatility there, and that's for me, it's a little bit some kind of worry, give that some kind of worry for me. And I see that he's talking about inflation too, and he thinks that this can increase the inflation here and everything. So I'm really, really confused about that speech today and about all these economic events, and I think that I cannot find the edge there at all. So
yeah, I mean, this is kind of the summation, I think, of the article you mentioned. But when Federal Reserve Chair Jerome Powell speaks in New York on Friday, he'll be facing a tangled there's that word, confused, tangled set of new risks to the long sought goal of a soft landing. And obviously this is the thing is, we know that substantive, like for example, the employment rate you've talked about briefly today, we still haven't seen the impact of all these massive layoffs coming in the federal government, which are of course are going to tip the scales come for the next report. And we're going to have, Powell isn't going to want to get hit over the head with a tweet from Donald Trump. So I'm sure he'll give us something so gray that it's unhelpful to get an edge, like you said. Yes. But what is he supposed to say? Trade wars are dumb. I mean, they are, but he's not going to say that. And we just have to hope that either whatever let's be a little bit more positive, shall we say there is an end game in sight for the reasoning behind these sanctions, right? Something which everybody else doesn't seem to be able to see. Okay, but we want to know what that is, right? So we can plan for it. And if it's not, somebody needs to step in and think like, why are you shooting yourself in the foot? Because you're shooting everybody else at the same time. So, crazy times.
Yes. Right now we can watch just the US dollar because we didn't watch that. To see what's happened there. And there is a very, very interesting thing. I will just share the screen. There's no problem. Just to show that can be really maybe interesting for all major currency pairs. I just show this is the very important price level, 103.5, and we saw several hours strong rejection of that. Now we have some kind of the bullish candle started going up. There is a chance that we can see, I don't know what will happen, of course, but we see that markets start to push a little bit higher maybe. And this can be very interesting if US dollars start to go up. I think that all these major currencies will start to do, like I said, some kind of healthy retracement. So everything is aligned now. US dollar, British pound dollar, euro dollar. So I think that the whole world is right now around the US dollar, and US dollar move is everything right now. So we can just wait and to see what will happen. And but the problem is that I don't have some clear plan if something happens there. So this is the biggest problem for me, because maybe only if I see some bullish pattern for US dollar, maybe I'm ready to additionally to add positions to sell British pound dollar, euro dollar, but I'm not for any kind of the
that's the advice though, isn't it? Right? There is uncertainty, and then we just have to default to basic TA. So for me, obviously any move, I would be looking to understand why the move has been made if there's a lot of hot news coming out. But obviously I would be looking for a change of character or a very good, a higher basic trend dynamics. But I'd be looking for that first, not messing around with, well, that's a double bottom, so it's fine. It's not enough right now. So that's what I think that's what we would be. It's reversal pattern season, right? In crypto, and apparently now with a lot of with the dollar. So it's just waiting for that reversal pattern to show strength, and then enter. But the thing is, before you enter, check the news.
Yes, of course. So I will wait. There is one you just thought about that. I spoke a couple of years ago on one conference with an institutional trader. That institutional trader manage trillions of dollars, and it's a really huge deal. And I asked one question about trading, because I always wanted to know about that. It's about this NFP and that important news. I wanted to know that institutional traders, do they stop their trades or wait or something related to when we have NFP or some important news? And that person said to me, he said that they already calculate all risks related to NFP report, and they do not close their trades. They just react on important price levels, and this give me a little bit more self-esteem. And I think that all traders that use technical analysis, because that important price levels are really, really important price levels, and even the news cannot hurt a lot of times. That scenarios maybe can delay something, maybe can be some kind of a catalyst in one or another direction, but that price levels always react in the real conditions. So this is something that I think a lot after that conversation with that guy. So what is your experience about that? What do you think about these reports, NFP and other things related to the market, especially for crypto market?
Well, I think it's the principle of looking around you, seeing the things which are going to impact you, and those things are going to change on any given day, any given week, any given year, any given cycle. Whether it's me talking about the money flow with Bitcoin dominance, which is the most impactful element, but obviously the same things that you're looking for are impacting the things I'm looking at, like the dollar. So I'm not suggesting that crypto traders should be, eyeing the Forex market in the same level of detail as an exclusive Forex trader would, but understanding when a reversal will take place, or when there'll start to be positive movement. It is, but you are going to get news. Economic data does impact these things, of course, so they're fundamental. And this is the conversation I always seem to have with my students, because they will have a chart which has got all of the bells and whistles, the fib levels and everything, right? And it blinds them to the basics of market cycle dynamics. So they'll forget to see that the asset is so far, it's come so far, right? And that the weather isn't giving them enough momentum to have the confidence to just come in at the next support level, because it's like, this is it. This is the markup. You've missed it. And because of all the technical stuff and all the indicators and everything, or even the news, you can get lost in it. So it is, learn what you can, take as much data in as you can, but don't let it move you away from the fact that we're at support, right?
Yes. You're right. Completely right. Do we have some interesting setups for today, maybe?
No, of course we do. Don't be silly. Yes. Let's have a look. So let me just, no, I've done nothing. I've just been watching TV. Let's have a look. So let's just check in with Bitcoin. Let's see if I can get this swapped over. And we'll just touch base, and then I really want to get into a trade. You want to get your thoughts on it, and that's it. But let's look away. Right. So okay. Again, I'm such a mess. I've got so many charts open. Right. Let's just find the right one. So this is Bitcoin 15-minute. Right. Can you see that? Okay.
Yes, I see.
So right now, I think this represents kind of the mood, and I'll zoom out in a minute. But we had this, this is just a 15-minute chart, everybody. So this is just since 3 days ago, right? Just at the beginning here. Yes. So we've had this potential reversal pattern here. It has actually, confirmed by breaking down below the neckline or support or whatever, and the confirmation line. But then we've come back up. And we bounced off this 1.618, and now we're back up. So again, an indecisive market, just as you've been talking about. But how can we trade this? Well, it's giving us so many signals. So this is technically not a higher high compared to that, but this is probably going to be a higher low. So where do we go from here? So it's really a bit crazy at the moment. And then you've got this support level on the 1 day. Good little tip as well, crypto traders, or anybody really, it'll help your multi-time frame analysis, because you can put moving averages from different time frames onto, there's an entry, onto a 15-minute chart, so you can see where the major support is on the higher time frames. And that can be really helpful, because even though we've had a nice bounce here, this looks like, this is a comfortable support range for the price action to come. I mean, what are you seeing when you look at this, Igor?
Yes, this is the I think just to see this the moving average. This is the 200 moving average that you have down. Is
From
it
the
right?
daily chart, yeah, the daily
From the
one.
daily chart.
Yeah.
Yes, yes. This is the some kind of the great bullish trend, as I can see here.
It's the thing. So if I zoom out, right, because
Okay.
the 15-minute chart usually we would use to kind of see what's happening, because we've had this bounce, we've come back in here, it's broken down, then we've come back in. So this is typical Bitcoin. It's a bit all over the place. And when we zoom out to see what's really happening, so this is just what's been going on. I'll zoom out even further. Let's go to the 1 day to start with, right? So let's just zoom out, right? So yeah, this is what we've just been looking at, and just this range here. And so we've come down, and this is it. It's just messy. It's all over the place. It's in the middle, right? Unhelpfully in the middle. But it's holding. You're right, because we had this strong kind of bounce. We couldn't get above resistance. Barely got a candle body close. We've got the point of control, but then we came back. We had a better foundation now, but then we've had a lower high, and then we're coming down again. So mixed signals across all of the trends, which is confusing to say the least. And equally so, the money flow has been a bit. So basically, this is Bitcoin dominance 2 hour. Simply put, a bullish pattern on this equals a bearish idea for the altcoin market, because if this possible double bottom is confirmed and the money flow breaks up above this is going to be poor altcoin trading. But as you'll notice, we've started to break down a little bit from this trend we were in, which shows that maybe we're not going to confirm this double bottom, which would be good for the altcoins. But right now, the market is just sitting pretty. And as I was discussing yesterday with Howard and Gianni, it was like we were trying to make sense of a trade, which direction to go in. And this will bring me to Litecoin, right? So this is where we're at. Let's have a look. Just zoom out so everyone can see. We were talking about this yesterday, right? So this is where we are. We've just had long accumulation, and we've just broken out into the next range, right? Simple, easy peasy. Do you see anything different?
No, it's like that.
Yeah, really straightforward. And obviously traders are looking to capitalize on. I mean, this is the let's go out even further. This is a bit of a messy chart. I apologize because I was doing a trade on it. So let's just, so yeah, these are the previous 2 bull runs. This is essentially the all-time high, which the previous bull run didn't break. And now we're just here. And people are now, we've had bullish confirmation. So if you're looking for a long-term hold, we're kind of in the area to buy. So the conversation was, this is essentially long trade territory, right? We're at the bottom of this range. Why would anybody short the market, right? So I was looking at this yesterday as trying to find a directional trade just for like tonight, or last night rather. So I identified that we had this pull down, and we kind of moved down to the bottom of this range, right, which keeps having these wicks, right, but there's strong support. Now, obviously, this is kind of telling us long, right? I mean, you see more long than short, right?
Yes.
And I was kind of like, I was trying to make a point about how we trade in crypto. So this is it. So this is my breakdown, and jump in whenever you fancy it. So yesterday, we established that most of the altcoins, including Litecoin, is in good positions for long trades. It's flashing long signals, essentially. We just need, to just scale in, get some good positions, right? However, this may be giving us long signals, but the rest of the market, Bitcoin, the king, and the money flow, Bitcoin dominance, are not. So last night, we had this, we identified this kind of this bear flag of sorts following this rundown to try and confirm a direction. It broke down below this, and then I thought, right, I'm going to try and do a trade here, right? So the premise of the trade was to buy the bearish retest of this pattern. And then I spent a little bit of time negotiating, where to put my target. You can see it was there. It actually came back down to here, but because we were in a very bullish long-term kind of long premise, I had to be very cautious about shorting it, and I adjusted my price target to match. So I wasn't like, if we were very bearish, I would be maybe coming in to take profits from a short trade from this level here, right at the low volume node. But because we are right at the bottom of a pattern, we're typically in the bigger time frames, we are long. This is how I would manage a short trade. So I was looking at Bitcoin dominance, just try and understand the money flow. And so far, last night, the money flow was still above this pattern, which makes the market hesitant, because if it breaks above, it's going to tank the market, regardless of where we are. All right. And Bitcoin, likewise, if I just find the right chart again, just waste so much time finding the right chart. Bear with me, people. Where are we going? I swear to God, I'm a very organized person. Right, here we go. So last night, Bitcoin was in the exact same position. We had put a lower high in despite a strong recovery. And then we had again, a diagonal trend line mirroring exactly what was happening with Litecoin. So there is selling activity. We're at the top of the range for Bitcoin, and we're going to have a bit of downward pressure. At least that's what I presumed. And because of the fact that Bitcoin dominance is giving us not particularly bullish signals in terms of momentum for the altcoins. Remember, if Bitcoin dominance goes up, altcoins go down. So we didn't have confirmation. So the market was hesitant. So I figured that was Bitcoin was giving us a sell signal. The money flow was giving us a sell signal or uncertainty, which is the same thing. Therefore, this bearish retest, despite being in an environment where people are trying to buy in, you can see this order block, it was just going to be a solid short trade. And it was. But I need to just admit something. Can I admit something to you, Igor?
Yes, please.
So when you know as well as I do, when we are trading against an obvious trend in terms of, this is at support, it's that's kind of the idea. We have to take additional mitigating, we have to think about the fact that there's a good chance we could have a reversal and what that will look like. So I first decided to put my entry point here, right, just a little bit lower than where I did. So it was 105.04 was the order I placed on the exchange, but this is kind of where I started with. But I really was, because we had this resistance line, you can see the resistance line is where I wanted to buy in, right? I figured we might get a wick just coming up, and I wanted to see if I could catch it, and I missed it just by a hair. Okay, so it's now hit it, but you'll notice that my intention was to get this wick to come up here and catch it, right? Which is essentially the point of invalidation for the trade, right? Because I like to get as close to the inside of the pattern as possible in case it reverses. So I missed out on my entry despite putting it on the exchange, and then down we went. So the moral of this story is, if I had compromised my plan and my strategy for trading against a trend by being extra cautious with my entrances and a little bit more liberal with my targets, if I had compromised that and brought it down a little bit, yes, I would have had a successful trade, but I wouldn't have followed my plan, which is going to bite me the next time I try and do this. So no harm, no foul. I was right in my analysis that the money flow in Bitcoin was going to give us this short move, but I missed out on it because I was being extra cautious. And of course, I think the lesson here is, not entering a trade, you lose nothing. Everything's fine, right? So stick to your plan, even if you don't get the entrance you want. I'm not going to change it. I saw it coming down. The market didn't give me what I wanted in terms of my risk tolerance, but nonetheless, it would have been a great trade. The power of looking at what Bitcoin is doing, because it will override any other signals on any other crypto, because as we said, it's king, it has the most power. Any thoughts on that?
I think that your advice is perfect advice. This is something that I fight every single day with this. And really, the conclusion is always the same. The best thing is to miss the trade if you cannot find a perfect level. And the next time you will always have the next chance. This is not only one chance. The chances will always just coming in every single day, week, etc. There's no I know a lot of traders that they think this is the last day. They need to do that, and when they miss the trade, they try to chase and they blow up account and everything. So I think always there's no problem to miss the trade. I missed a lot, and there's no problem. I don't before I was emotional. Right now I'm not anymore, because I know the good trade will always come to me. So there's no problem with that. And one question related to these setups, what is the correlation between the US dollar and Bitcoin in your experience, and on when that correlation is the strongest?
I think, as we looked at, I think I disappeared that chart which I had at the start. But I think to answer, just see if I can quickly find it, because it does kind of, because it'd be a good thing to look at while I'm answering that question. But again, now you're just going to have to cycle through them. Here it is. No, on my ridiculous charts. I don't know where it's gone. I'll find it a bit later, maybe. Let me just back my chart. So typically, when the dollar is strong, high risk assets suffer. But as we looked at the chart, I was trying to find it when the dollar is consolidating, regardless of where it is, that it gives the crypto market a chance to move, because there's no immediate threat from any drastic move either way. When it's going up and when the dollar's strong, then typically there's a lot of hesitation in the market, because we need it, things are high risk, and people just don't play ball when that's happening. So really, the scenarios you're looking for in crypto from the dollar historically, and it does change. We talked about, there are Bitcoin, and the crypto market does change its kind of what it likes to be pegged to, depending on where we are in this cycle. But the dollar consolidating is okay for crypto. Going down quite strongly is excellent for crypto. But going up, a strong uptrend from the dollar, you're going to have a lot of inhibited movement, really. That's the general rule, and it is just a general rule, but just basic stuff, really.
Yes. Just to check that from your angle. So I just got idea to show on my weird chart, if you don't mind.
Yeah, please.
Yes, just to share to the audience that just look first to find that.
We've got to keep the pace going. We've got to keep back and forward. It's good.
Yes. I just want, it's my little trade that I want to experimenting something, but we will see what will happen there. So I will share the screen right now. There is one chart, a little bit, if you want to watch on the weekly chart. So look, this chart. This is the Euro CAD. And in the 2018, it was 7 years ago, we had a high. And after that, in 20, and there is a line that we can draw. And we have 1, 2, 3. Now we are on the 4. So we just touched this trend line. This trend line is so strong. It's a 7 years trend line. Wow. And we touch it right now. So and right now the euro is so extended, so unnaturally so extended. So this can be interesting move, maybe for selling in one moment. On the daily chart, I just yesterday we had a bearish candle here. Today we have a bullish candle, but we don't know what will happen here. What I would like to see here is maybe right now to go down, and maybe we can create some engulfing bearish candle here. It'd be beautiful, and that can be really good rejection maybe, and we can go down or something like that. At least we can go, even if this is the longer term bullish trend, we can go, for example, here. Okay, it's just a bad it's a bad trend line, just to draw in the better way. Okay, so actually maybe to put the horizontal line, it's maybe better, just to see maybe to put it like here somewhere, maybe price can make some retracement here and continue upside. But this is something that it's not too often to see. It's very interesting to me because this is the very long time, and it's unnatural to have 1, 2, 3, 4 dots on a weekly chart to the pips. This is the really the really special something from the technical standpoint of view. So I will monitor this trade. This really can be good, and from the fundamentals, it can be great too, because we have a very weak CAD, all because of these tariffs and everything. And right now we see some improvements for the CAD. And the other side, euro was on the peak, and we wait for the retracement, and all of that can mix up and create interesting trade. Of course, there's no technical point of view right now to enter right now, but I just want to monitor this and maybe to enter here. So I think this is the interesting. What do you think about this?
You're talking what I mean, what would you talk? What direct you? I mean, are you presuming? So what would give you a say, for example, because obviously the thing is with these are great opportunities, but because over time, and that's a huge, that's crazy. It's difficult to. You obviously now though, because it's a descending line, you have got this one range, kind of a very light volume range, sitting above now based on that first 2018 kind of high. And what I would be, I mean, so if we do continue to have issues with, Canada is under pressure, then, I mean, are you looking for what would give you a warning side in terms of any short position? Would it be a candle body close above this on the weekly or the daily?
I want to see on daily, for example, to see if we see today, for example, that this bullish candle start to go down, or maybe we finish this day bearish after the Powell speech, for example. I don't know what will happen, but if we see here a bearish move, this will be the clear path at least to this level here. So I just waiting to see, but it's really interesting. I don't know what will happen here, because it's a little bit this is not the market that I trade. I'm not experienced so much with the CAD pairs, and this is not perfect setup for me. This is some kind of counter trade. A lot of traders do not like to trade on the peak, like now, like we have example right now. But this is something very rare in my point of view, and I think that technically we can see something. And right now I'm watching euro on a various charts, for example, and right now on the hourly chart, we can see we have a 15 minutes more. This can be a bearish move. And if we have a couple bearish candles, I think that my bullish bearish validation point for today for euro is 1.081. So if the price breaks this price, I think that there are several days can be bearish for euro dollar, that we will see a bigger correction. And this is something that I expect for euro. And of course, as we see, the U.S. currency asset is the same thing. We are on support. We're trying to go upside, as we can see right now. So everything is correlated right now with U.S. dollar and the movements that U.S. dollar is making. So I just want, this is the way how I think right now. If we see, for example, a strong push for US dollar upside after the speech or something, which currency pair is the best to trade? So this is something that interesting for me. The euro dollar is the strongest one right now, maybe it's not the best thing. Maybe British pound dollar is better, and maybe this euro CAD can be interesting if we see that euro is starting to weak on all charts too. So I monitor everything just to get the idea. So I know that a few good traders told me the best way is to monitor 4 or 5 charts, to have prepared 4 or 5 setups, and to pick one the best.
Exactly.
And in that way, psychologically, trader will feel in the best mood. So this is something that
exactly, it's exactly how I work, and I think this is integral to what you do. But it's so many traders, regardless of the instrument, forget, like we're talking about with like Bitcoin dominance and the altcoin market, the inverse of each other, and charting a pattern on one to predict a pattern on the other. And you're obviously, there's so much more, obviously you can step back and you can say, the US dollar, probably based on what's happening, has a lot more pain to come. But when you're looking for maybe, I don't know, a short entry or a bullish entry based off of that huge diagonal trend line, you're going to need some serious confirmation to figure out what's happening, because the dollar could come down more, and there could be, because the sanctions haven't been fully lifted. It's only just in certain sectors. But correlating, looking at the inverse things, looking for patterns on both, and then correlating them together. So you see a reversal pattern for the dollar, and and obviously we're going to want to see some serious confirmation here, a definite change of character or whatever. But then you'll go to the flip side, and you're going to need to see the same on the other chart you were looking at, in terms of, because the problem is, if things that could very easily break out and go to the upside and just continue, the pain could continue. And this is what we're talking about all week. It's like, it's not just, we've got to focus on the TA, of course, before we enter a trade. We're not going to try and front run anything because things are chaos, but we have to pay attention, because if you're looking at this now, but this is the thing, right? The fundamentals are reacting to the news, right? So if you get a strong reversal pattern, that is because the news and the economic environment has provided the context for that to happen. So TA isn't ignoring what's happening. It's just make sure you are focusing on it, because it will reflect the sentiment in the market anyway, and that will give you the probabilities you need to choose the right direction. I mean, did that make sense?
Beautiful. No, it's really smart speech, because we need to make this complicated planning, but our execution will be simple. So this is maybe the best way.
That was much better than what I said.
Yes, it is. So right now, so I can check, can I go to my servers? Maybe I can share the screen, something that other people cannot see.
Yeah,
I will try to do that. I will see, is it possible to catch that? I will just try.
I'm just going to double check the crypto news while you're doing that, see if anything's happened.
Okay, I will. Yes, so I can share that. Maybe you will see that on the chart, just to see. Do you see? Yes, you see that.
Yeah.
Okay, this is my system that I created. I have some algos on my server, and I create some AI that help me sometimes in decisions, and etc. So I use fundamentals and technicals. I create classification models and ask various questions and try to see what will AI tell me. For example, the question here is, will we see the new 48 hours high or 48 hours low, for example? And for day, I'm getting the results no. This is the 100,000 hourly candles tested in the past for British pound dollar. And this sometimes it's really powerful, because all these questions that I have more than 75-80% accuracy. So when I see that, it's really great data I have beside me, and give me a little bit extra extra confidence when I see everything of that. And just to show you this is the something that I invented. This is the this is the pivot area.
You invented this. You say you invented this.
Yes, this I will just show you how I will try to describe the way of my thinking, and maybe for some listeners this can be very interesting. Maybe in future decisions and etc. So how this works? I realize that when people want, when the traders want to calculate the pivot points, there are a lot of formulas, and each formula is different, and there is a different price. You will get different prices there. And then I watch about this is the trick from the hydrology and from meteorology. So when you want to calculate the average temperature, there is several formulas that you can use. The whole world, the majority of the world, use the formula. You find the low temperature at 7 a.m. You find a high temperature at 2 p.m. You find two temperatures at 9, and you then divide that with 4 when you calculate the average temperature. And the similar thing we have with pivot points, because we find a low, the high, and close price, and we divide with 3, and we find the average value. However, we have various formulas, and in methodology, they use some special equation, and I use that equation to create this pivot area. So what I did, I will just describe. I find where is the pivot point, and then I use different formula to calculate the pivot points, and I find the difference. And the difference in other formulas, I just add above and below the pivot level. It sounds a little bit complicated. However, I realize that price always during the day will touch some point here in this pivot area. And what I figure out, and this is something that blow my mind actually, is this trick, and I will show you that. If we have a strong bullish trend for every single asset, that can be crypto, that may be euro, that may be dollar, whatever we have, if we have a strong bullish pattern for that day, the price in early morning will touch just the higher price of this blue rectangle on the screen, and then continue to go up. And sometimes using this area, I can calculate to the pip the moment when we touch that level and going up, especially if that level is Asia low, or very near to the Asia low. And so I use this very often. And this red line that I use, for example, I use that red line in prediction. This red line is changed every single minute, and calculates what is the find all prices that we have. This is the average price that we have during the day between the low and high, and calculate where we are now, for example. And as you can see here, we are above this red line, and this is very good indication. For example, what will happen if we see the price just start go down and down, and maybe touch this pivot area. This is usually the way when you have some strong reversals, etc. So of course, this is some tools that I just created for myself, but all that tools I put in that machine learning algorithm, and they give me a lot of some predictions that I use later in trading. Of course, I use that for quantitative trading, but I use it for manual trading because I can create the questions. So I can create any kind of question, and I can get answer based on the previous data. For example, that question that we cannot get is what is the future price, because the algorithm will not give you the right price. Nobody can. However, if I ask some simple question, for example, will the price be above the simple moving average 100 today on the end of the day? He will calculate the probability, and that accuracy will be above 80%, for example. And that means that for me, that's very valuable because, of course, if there's some unpredictable news, we cannot do nothing. But as we know, the market is usually without the news, and we can use that in trading and check the prices and everything very, very often. So, like I said, I just monitor right now the euro dollar. There is the very similar decision that we will not have neither high neither low today, based on the previous data in the past. And I use this very often. Yes,
that is so interesting. Obviously, these, you know, we can very easily just jump into a conversation now about the impact AI is going to have on trading. And I always look at it as from a coding point of view, because it's always about access to coding, essentially, you encoding knowledge. And now people, so just a few months ago, I hired somebody to just create me a basic translation bot using ChatGPT for a Telegram channel, right? And they went away and did it, and it was fantastic. But now I can get Claude AI to do it for me, and I don't need to know anything about coding, and it'll give me instructions. So the coder is now going to either be out of business or become an app developer by using the tools he used to, like the AI, to use the things he used to do manually. And everyday traders are maybe soon going to be able to type into, you know, Claude AI or maybe not so much ChatGPT, and just say, hey, create me a trading algorithm to run on my server which fulfills this criteria, and show me how to implement it, and it will do it. And it's fantastic, and it is the future. And anyone ahead of the curve, well, we're talking about finding an edge, right? You've got an edge right there.
Yes. The problem for me as a quantitative trader, sometimes the problem is actually when we trade CFDs, we have only two things: it's a price and time. And every single indicator that I use, it's just a function of the price and the time. So I don't have enough information from the charts. I can use a little bit fundamentals, but it's very, very hard to develop expert advisor that will be profitable. And that's really, really, really the problem. However, what I can do, I can see these institutional traders that use these special algos in the market. I try to crack the way how they work. And usually the way how they work, it's not like, okay, calculate this level, exit that level, go to this level. It's a little bit, if you touch this level, then you need to touch this level, and then you will go there. For example, it's a little bit complicated, but if you figure out which two levels or three levels that algo watch, you will crack the code. You will know what they're doing. And usually that algorithms are not so complicated. It's a simple, because it's just a function of the price, important price level, nothing special there. And this is something that I try to crack all the time. And I see that in your industry, for the Bitcoin, some programmers find very, very good expert advisors, and they're very good there because I think that there are not so many institutional algorithms there. And the little guys like we have more space there to do something. And I think that the Bitcoin and the gold are the best for expert advisors right now. But for this euro dollar, British pound dollar, majors, etc., it's a little bit complicated because there are so many players, and that players are so good, and it's very, very, very hard to fight against that guys. That's really, they're really good, because all that hedge funds and the Wall Street and all that, they hire the best kids for the best universities. They're so smart, and they have the best platforms, the best teachers, the best everything. And I know
the best algos. I mean,
yes.
there's a whole industry And right now, the industry is based on old tech. Like this, every exchange offers you the ability to program a basic bot to like buy on the break of the SMA or whatever, right? But with the AI, all of a sudden we're getting to the point where, and obviously it's right now it's such a basic level AI, right? We're so basic, but once we start to get a bit of traction there, then it could have the potential to really upend how things operate, you know. And I hope it would not go in the way that the internet is going at the moment, where it's essentially bots writing articles advertising to other bots, right? Where everyone's just
Yes.
we don't want that situation, right? The dead market theory. But I think that the point, so it's something everyone should be paying attention to. And there's crazy Bitcoin algorithms out there which takes into account the moon cycle, and I'm like, it's all a bit, you know, and it does kind of work. But I think getting back down to earth, what you were talking about is, you know, when you are struggling to ascertain what's going on in a market and you've exhausted like the basics in your tool belt, you either have a choice: you don't trade, or you try and use something else, another technology or another insight, to get that edge that allows you to trade, which is what essentially the big boys do, because they can trade any conditions because of all of that technology and insights they have. And that's obviously where we're all trying to get to. But yeah, the future, what's but I mean, what I would say is, like, I mean, you don't like sit back. Do you envision a future for you where you sit back and you've got your algo and it says today you're going to trade this? Do you ever envisage you being like that, where it just does everything for you?
No, I don't. I really like manual trading. I need to admit that, because when I see how that algo can be stupid sometimes, I rather be the manual trader, because the algo is algorithm. So this is not something that in the situations it will be very stupid, and the human is human. So I believe that manual trading is the future, and the algos can be just a tool. Just a tool can tell me some things. Now, last 4 years, I can admit I'm using the algo just to answer me on some questions, just to know what is the probability, what is the statistic from the past, just to know. But I don't like when algos make decisions, because I think there will be a lot of mistakes, and that can cost a lot of money.
Yeah, it's definitely interesting, and look at it from just, you know, what we're trying to do as traders is obviously, as you said, we're trying to quantify what we're seeing, and that's how we manage it. And the second we don't follow our plan, obviously all that falls apart. But it's just a mission of always trying to find new ways to quantify what we're seeing in a way we can observe patterns and trade them. And that's the end goal. But well, I don't know what's around the corner, so I'm not going to really comment, because you'll just come back and look at this and say, "Hi, you were wrong." But
yes, but I just give you one example of how that can be valuable. For example, so I made a expert advisor with only two conditions. So buy if relative strength index is below 20, and there is a news that Bank of England make intervention in the market. Only that two conditions.
yeah,
And after the tests, what I made for last more than, I think, 25 years for this century, I realized that we have at least 3 daily average true range upside when that happens. And when I see that right now, I know it will be 300 pips, Igor. Just trade this. We have a statistical edge, and that I will never put to algo to trade that. I can do that myself, because that situation is maybe 1 or 2 times per year. It's not something that we can see, but I know that I can catch 300 pips, for example. And for me, that's very, very valuable, because statistics is on my side. So I think for that, the algos for testing the market in the past and make conclusions, I think this is the best.
Yeah, absolutely. it's good to, you know, get people exposed to this sort of thing. This was the chart I was trying to show you. I think we looked at the start of the week. Do you remember this chart?
Yes, this is the US dollar.
Yeah, so you asked me about, you know, the impact on the dollar on crypto. Basically, as you can see historically, you know, a loss of the SMA 15, uptrend, downtrend in the dollar. This is the weekly on the bottom. Consolidation does allow for movement. And then again, downtrend, uptrend, strong uptrend, downtrend. You know, it's a pretty straightforward correlation. And again, comfortable trading range, as we talked about, and then that's allowed Bitcoin to make its ascent over the last year or so. So, and this, of course, this, if we've got the break of the SMA 15 again, could be the factor which gives the Bitcoin permission to continue on its journey. So I'm glad I found that. Any comment on that? Just to close that up.
A beautiful chart. I don't remember. So beautiful.
Thank you very much. I'm thinking of doing an all painting version of it. So I just wanted to, we've only got about 20 minutes. Do you mind if I just close out with a little bit of crypto for the last 15 minutes?
Yes,
so we can
please,
see what the news is?
Please, Paul.
So, yes, we was discussing this trade, and obviously all about, you know, understand the weather, understand that, be aware if you're trading against a trend that you have to take extra action to ensure that, you know, it would have been a successful trade, but missed it slightly. Now, here's the thing. It's come back up to where my planned entry was. And on this chart, right, it's, you know, this is a potential another short opportunity into this range, right? No big deal. However, right, this is obviously a higher high now, and we are obviously in a long buying context here if we zoom out of the 15-minute chart. But also, whereas here I had Bitcoin and the Bitcoin dominance in the right posture to facilitate this downwards move, now, despite it's actually at my actual entry, the premise of the trade has changed, because now Bitcoin is in the middle. It's not at resistance. So we haven't got as much guarantee that we're going to come down anymore. So that opportunity has been missed. And Bitcoin dominance has now started to give us signals that we might have a bit of relief for altcoins. So it's now not a short trade anymore, because the TA here, despite giving us that signal, the weather doesn't. So it's so powerful that what Bitcoin does, what Bitcoin dominance does, will determine, you know, what happens to this trade, which is why it was a well predicted movement. But it's high risk. But whenever you're doing whatever you're trading, you've got to take this into account. And this is just a random crypto, which one of my students was working on, and absolutely going to be a brilliant trader, no doubt. Now, this was a very straightforward, very strong uptrend. This is just the hourly. Typically, I would zoom out, but just to show you the point. So the premise of the trade was to buy simply the retest following the breakout of this long-term resistance level, right? Textbook, right, Igor, right? So have I lost you, Igor?
No, I'm just watching. Yes.
So the idea was to buy here, and immediately the market tanked after, you know, looking at the candle patterns, and we got the confirmation that, you know, this line is holding, there's no candle body close, but this trend line hadn't been identified. Okay. And if it had been, then we would have realized we have just got stuck potentially with this bearish retest of this pattern. Plus, again, there's the bell curve, right? We've got this, you know, we are markup. This is markup. We're at resistance. We've just broken out, right? Is the market going to give us the conditions to have a bounce here? And that's when we turn to Bitcoin. And this was at between 5 and about 6. The breakdown was about 9 a.m. Thursday. So we look at what Bitcoin was doing on 9 a.m. Thursday. Again, disorganized charts. So 9 a.m. Thursday, we were here. We had put in a lower high. We were starting to break down from this pattern on Thursday morning. And that, of course, has dragged this chart down. And because Bitcoin dominance, again, I'll try and find it. Bitcoin dominance at that time, Thursday, was just retesting what was support at the time. Traders will of course think that there's going to be a bounce, and if there is a bounce, this is money leaving the altcoin market, and that is again going to affect the trade, and that is exactly what happened. And it was a failed trade, but tremendous premise if the weather was different. So if Bitcoin had just put in all-time highs, the money flow had broken its long-term trend and was now moving right down here below its primary trend, then this buy would be a much better premise, because we have a bullish context and we have a bullish breakout. But because the market, the weather isn't great, it's allowed us to, it's pushed it down, which is what I was then benefiting from to get this short trade in the face of trends going against me. And this is the game in crypto, and this is what will give you an edge. Did that make sense at all?
Yes, understand.
So it's always this negotiation, completely, and just follow your plan. But before we finish, I think I haven't looked at Ethereum, because I think I scheduled not to look at it, and thankfully it's done nothing, which was a good plan. So we were talking, I think I was talking with you about Ethereum as well, and we were looking about maybe just trying to long-term buyers to catch a wick, but we're now firmly back in support, but without any kind of bullish confirmation. This is the daily chart, any kind of bullish confirmation yet. So the market's waiting, as we just saw with your assets at the start, Igor, and we just want to see, what's happening. Again, same advice with Ethereum, ideally, because we've got a hesitant market, wait for a breakout, and this is still the same level, but we've had a bullish move before it, preceding it, so that would be a better entrance. If not, maybe just trying to scoop up. We are oversold. Let's just have a look at the weekly, which represents the primary trend properly. Yeah, so you look at it like this. Right, primary trend. It's just very janky. I mean, you can see we're kind of breaking down, Igor, right? And we're going to get trapped at this little corner. Do you see that?
Yes, I see that.
And again, if you look at this is, but then we look at this chart, which is another perspective, we're just in a good buy zone, right? So caution, because we're getting mixed signals from Ethereum. We just need to wait, see what's happening. But good buy entry, but nothing has changed from the start of the week. We are very much just trying to find our feet and just waiting to see if the market tanks. So again, nothing changed with Ethereum, a good buying opportunity potentially, but ideally, because we need to be a bit risk averse, as we were talking about earlier, we want to see that breakout. So that's where we are with Ethereum. And can you guess, Igor, what Bitcoin Cash is doing? Can you guess?
I think it's on some support.
I don't mean to put you on the line like that. That's it, right? So it's exactly where it's been the last few days. It's come up. It's sitting in this range, right? Which is still, for me, unless we get a candle body close above this level, right? It's not bullish confirmation, but we have established support in this very narrow, no man's land. So you can see what other traders are thinking. This is the 4 hour, so it's got a good insight into just the intermediate trend. So they're thinking of swooping back in here to catch this moving average. But let's see what the I want to see if with the RSI, because I'm trying to figure out the direction. So load up the RSI, get the basics. So we're pretty oversold. And I'm going to do your lovely little trick, right? We're going to see if we can get something mapped out on here. So if you're looking at a short trade here, we've got to try and find a signal. So I'm going to steal your technique, Igor. So let's have a look. So right, yeah, we're just trying to find a way to kind of get an edge here, and how the RSI reacts to this trend line is going to be quite telling, because typically if this starts to break below this, I would take that as a signal that we're going to maybe have a sell signal. I mean, would you follow that as well?
Yes, of course. Yes, it's beautiful. It's a beautiful range. We are on some kind of resistance, and if that breaks, it will be wonderful.
But we could still get a bounce because there's a lot of headroom ahead. Yeah. So if we get, and this is how we need to work, people. We need to be, recognizing that there's ambiguity, and then trying to find, just as we we're just talking about, trying to find a way to quantify it, and then to get that edge. So I have a line in the sand now. It's not enough to make me trade anything, but I have a line in the sand to watch, which can help me determine what am I looking for. Is from Bitcoin, really, because as we've established Bitcoin. So right now, this is actually this is giving an argument that we might actually have a bounce, right? Again, I lost it again. Where are we? Seriously, there we go. So because if the money flow starts moving in favor of the crypto in altcoin market moving, which essentially means there's less Bitcoin proportion than there is. I think I've just closed that chart. That's so unhelpful. So yeah, if essentially Bitcoin dominance goes down, which it started to do, this could maybe keep this in this range. And if we get some bullish news, we could get a move into the upper range. And that's what traders need to be aware of for a start. So keep your eye on Bitcoin dominance. And of course, with Bitcoin, now we're in the middle of no man's land. We need some kind of signal. So if we get a bullish move now up here, maybe a higher high, then you're going to switch Bitcoin Cash to a potential, support buy in this new range once you get a confirmation pattern. But what we need to see from Bitcoin to confirm a short trade would be, of course, a continued move perhaps back into this range. And then once it does that, maybe Bitcoin Cash will do this. So if Bitcoin comes down back into that range, we might see this, and then that would be your entrance for a short trade. And then obviously whatever's going on with the RSI would give you added confidence. There's more to do, obviously, on this chart, but this is the basic negotiation in crypto, always back and forward from Bitcoin, trying to figure out what its next move is. And there's still room to come. So when you see it in the middle, support's below and resistance is ahead, it can just be a waiting game. Because obviously my trade yesterday, it wasn't that. I had clear bearish signals from Bitcoin because it was going to break down. That happened, but now we're in a different place. And this is how we approach things. So that's kind of all the things we've been looking at this week. And again, this is probably switching to a long opportunity now. We just need to wait and see what happens. Buying on the 200 MA here, buying around this area for a long position would be great, capturing this low volume node. But expect this to range for a little bit and expect Bitcoin to do the same. But just to give you a more clean chart before we look to start closing. So this is Bitcoin dominance, still in a strong uptrend. We need this to come down, but let's just find a nice clean Bitcoin chart just to give us a bit of confidence if I can find it. There's a nice clean one. That's not it. That's not it. That's not it. Oh, well. So this is where we are. And I think, as other traders said, this is the range to look at if you're trading Bitcoin right now. But obviously, as we all know, any move, any confirmation move, which will be a candle body close on the daily below the 200 MA, which is this yellow line, that is going to give you some concern. As you can see, every time we break below it, there is a lot of hesitation, which can maybe take a couple of months to resolve before we carry on our way. So we want some solid news out of the White House today with a solid plan, which makes sense, which might be a tall order. I don't know. And if we do get that, then we might get a push into this range. Then bullish momentum might start resuming. But a lot of obstacles ahead. The tariffs don't help. The dollar doesn't help. The dollar does help, but all the uncertainty doesn't help. And this is, of course, the game right now. Anything to add from your wonderful self, Igor?
This is the excellent review. I just want to add, related to the British pound dollar and euro dollar right now, something special is.
Yeah.
I will just present right now. I will just share a screen.
Do you reserve talking about the pound when I'm on, or do you just do it with anybody?
This is the something that I just mentioned 1 hour before this. So we talk about my bullish bearish validation point for British pound dollar, and I said that my bullish bearish validation point is 1.2890. So we are just 9 pips from that price. So we are right now on that bullish foundation point. So like I said, it's good to enter into trade if we see that price is going below 1.2890. And I think this is the special moment because we are waiting for the news. I don't know what will happen, but as you can see, the market is prepared for the bearish move. So this bad news that we had today for a US dollar is typical news rejection. I can tell right now because based on the market structure that we have now, for the traders that watch this session right now, there is a book that Jack Schrager writes. It's a Masters of Wizards of Trading, and trading wizards. I don't know what is the real translation. I think it's that in English
Works.
language.
I like that. Trading wizards. That's cool.
Yes, trading wizards. And there is a special interview with Jason Shapiro. It was one of the best traders in that book. And this is his approach. So what he's doing whole day, he watched the news. For example, today he can watch in NFP. And he watched the news. And in the moment when he just mark that for that day, market reject the news. This is the signal is to go in that direction. For example, right now the news reject weak dollar. Dollar can become stronger, and because of that, Jason Shapiro can, for example, short British pound dollar or short euro dollar or buy US dollar in any other asset if he wants that. And then he keep that trade couple days, sometimes longer, sometimes shorter, but every single year. So the worst year for him is, 30%, but he managed millions and millions of dollars, and he's one of great trader. And I learned really a lot from that book and from him. But I think that all traders can learn from that, because the news rejection is sometimes stronger trigger than classical news following system, because it's something that it's a little bit rare. And right now, to have this bad news for US dollar and price to be like this, it's a really rare signal. And I believe that's beginning of the several days or couple days, some kinds of retrace. So if we get that, as you can see, this is my Fibonacci retracement. I took the week low and the week high price. The high price was 1.2945. The low is around 1.256. We put really a lot of pips this 1 week, of course. And now there is a probability that we can touch this level here. It's 1.276. It is very important level and for the British pound dollar. But like I said, what I want to see is this magical level of 1.2705. So there very often in last couple of years, price retrace. It's so common thing in 2023 and 2024, right now in 2025, and we are very close to see that. I would like to see that price from this stage to go here and then to make a buy order and to see the new highs. It will be beautiful trade if that happens. However, right now we are on a good track for British pound dollar, and for euro dollar, just to check, similar story. We have a bearish candle right now, but in just a 6 minute we will have the speech. The good thing for that speech is that after 30 seconds we will have confirmation, because internet is magical. And I know that in my experience, after a few seconds we will see how market will react, because that speech will be public in just a second. So
these setups, I mean, this is the thing. This setup sort of highlights really how we need to kind of stay focused, because we all feel like we're in a whirlwind. And I mean, just right now, I've just seen the news that NASDAQ plans to offer 24-hour trading in 18 months, right? And like, right, that changes the game a little bit. So, I mean, did you hear that?
Yes. I just checking the news right now to see are there anything, but there are so many news in the market, and it's very hard to see everything. Just to see here, are there any special? Yes, for the sterling. Okay, this is all things that we already know. There's no such a special thing, but this for the stock market, I didn't know. So, how do you see that, Paul?
I need a minute. I mean,
yes, it's very hard to know everything. Yes,
I mean, the point. This is exactly the point I'm trying to make. And you're trying to make. It's like, right. the buy fear, right? Buy fear, right? This is what there's many opportunities when everything is going to chaos, right? And that's what we just have to keep our eye on the ball. And that means just decide what you're going to look for, to enter your short position here or whatever, and then just stick to the plan until something changes, because you can just get completely lost with the news ticker and forget about the fundamentals. And as we talked about, the fundamentals will reflect the sentiment in the market, so you can trust them. It's just you want to know what's coming around the corner, I think is the point. And it's the same with crypto. Just keep your eye on the ball, right? If you're not certain, right, back off, because maintaining control is the most important thing, right? And I mean, if I have a bad week, right, and I'm just probably just so busy, I'm not even trying to trade, because I won't be able to focus. I won't be able to keep my head, right? I'll just be thinking about whatever was just tweeted, and I'll make mistakes. So
yes,
that's the whole game, I think. And there's just so much to absorb right now.
Yes, we are like computers right now. It's just try to create some interpretation, but it's very hard to collect all that news, and it's hard to have a critical mind. This is something that it's very hard to do, because there's so many triggers and there's so many different opinions, and interpretation is very hard sometimes.
So to finish, I think people are going to be asking, how do we get through this weekend? What would be your advice, right?
For this weekend, I will just get and watch, and I will watch what will happen. I think the best thing is to see how we'll end this speech right now and the movement right now. But if it happens like my ML predict, that we will not see any new low and new high, I will be out of the market. I will just close my trades. Of course, I have a couple swing trades. I will keep them, but all these short time trades, I will just close them, because when we have this kind of the news rejection things that happens just now, or this mixture triggers, that can be situation that the Monday open can be something crazy. We had that, I think, in the beginning of the January. We have a gap, like we trade stocks. We had a big gap for euro dollar, British pound dollar. It was insane. And I don't like when I see that in a Forex market. So I want to see what will Monday open brings to us, and then to make new decisions, because really we need to be focused right now.
Yes, and just I'm just going to call it. I'm going to say right now, just leave today, Saturday, Sunday, Monday alone for trading, right? I'm not commenting on any specific positions you might have, right? But there's a tremendous amount of uncertainty. Just don't try and engage if you haven't already had a plan. Just wait and see what happens on Monday, see where the patterns are, see where we are, and then we'll trade that. Because right now, over the weekend, I'm pretty sure we're going to have to digest whatever's and see how the market reacts. So I would, just back off for a few days and see where we are on Tuesday, I guess, as you said.
Yes.
So,
yeah, this is the best advice. Let me see. Okay, we have the speech. Are there any interesting chart at your side?
I think we've run out of time, right? Have we run out of time? Where are we?
Yes.
Time flies when we're having fun, right?
So, yes.
Yeah, God, yeah, it is, right. So we do need to finish. So yeah, there we go. End close. And I look forward to more setups next week, Igor, and I'll try and keep my game up to compete with you. So we'll see how we settle next week.
Yes. It was a pleasure to have this host with you. It was really beautiful to see your opinion about the market, about the trading and everything. So wish you a great weekend.
Likewise, thank you. I'll be thinking about your setups all the way through next week. So this is all good. Have a good restful weekend. Take care for now. Thank you so much.
Bye-bye.
Bye-bye.
Hey, hey,
Hey, how you doing?
hey, I'm great. How are you?
Very good, very good. Enjoying your gold market.
Man, it's just still sitting there. I'm just trying to take advantage of it, but it's not setting up the right way.
Oh, I've been watching it the last couple of days, and it's there's a lot of chop going on, huh?
For sure, for sure. And this is why I always say you definitely need the confirmation, right? You have to have
Yeah,
it.
yep.
Nice, nice. Well, yeah, nice to jump back on with you. Happy Friday. Hopefully, things
Yeah,
went great. I know today was a NFP. Um,
yeah.
so hopefully,
Usually a good day to kind of stand aside, I think, unless something obvious comes up.
yeah, that's literally my rule of thumb. I still monitor it. I still check it out just to make sure I'm not missing a Mona Lisa, as I would call it. But yeah, NFPs are definitely days, and I'm kind of more of a standby to the side, passive trader. And then even then, I'm typically not full sized. Like I'm half position, if anything.
Yeah, yeah.
I've
One
been
thing I found with so one thing I found with the currency markets is typically you'll get the move on the Monday which follows. You'll get
mm,
a lot of people panicking after the figure, and then over the weekend they think about it, and then you get an interesting move on Monday. So should be
right.
good for some kind of Monday move.
For sure, for sure. And yeah, I agree. I think the same thing. Even on like Thursdays, like the day before NFP, I
Yeah,
find it that like those moves that you're kind of looking for, they don't really play out. They kind of hold that level and then they
yeah.
run the next day with NFP.
Yeah. It's kind of often get a very small range because people are thinking, well, I don't want to take anything too big ahead of the number.
Right, exactly. Which is a great decision, right? Super, super smart thing to do.
Yeah, safety first, huh?
Exactly. Capital preservation,
Yeah.
right? Well, sweet. Well, yeah. Welcome, traders. Welcome, welcome, welcome. Hope everyone had a great trading day today. Hopefully, no one got too risky on this NFP Friday. Hopefully, there were some opportunities that you guys were able to take advantage of. And if not, hopefully, you sat to the side, right, and didn't risk anything and didn't chase any trades and not have that desire to just click the mouse, right? um, and if you guys have noticed, me and Howard just both agreed that typically NFP days is a day to kind of, step aside. I actually call it that's the day for the gamblers, right? Like that's when all the gamblers come out. Even to think that there's traders who only trade NFP and nothing else, right? Like,
Yeah, you can certainly get a volatility fix on NFP and some of the other major releases.
for sure, for sure, I agree. Well, cool. I know we might got some new traders. Maybe we want to start out by giving I know you and I have been doing this several times, but maybe like a quick intro, like what we trade, and then kind of jump into the charts.
Yeah. Okay. Yeah. Cool. So, from my side, I'm an FX guy, FX and commodities sometimes, but mainly foreign exchange. I've been in the markets for over 30 years, so I've seen quite a few swings, both up and down. Some very interesting things over the period. So, yeah, you name it, I've seen it. And the experience, it really does pay dividends at the end of the day.
For
um,
sure.
and uh, and really, it's for me, it's been quite a journey. Lots of things that I've done wrong along the way, which hopefully I've learned from. I've learned a lot from other people's mistakes as well. I've worked for people who have not been particularly been clever at trading, but good at what they do. And that's one thing that I find, when I talk to other traders, that it comes out that to succeed at trading, the skill set that you bring from other fields, you might be great at something else, but you come to trading and you try to apply the same formula, and it doesn't necessarily
Hmm.
work because it's a different game. So for me, currencies. I look at all the other markets as well. I try not to think too hard about the interrelationship between them, but sometimes it can help you. But typically, I find that most of the things that you do as a trader, particularly the more shorter term you go, it doesn't matter what asset class that you trade, you tend to be doing the same. The markets tend to behave the same kind of way in terms of short-term movements. So very much stock-driven, volatility-driven, and that's really, I guess, what we're here for, to to try and benefit from the the thing is, it all comes through on the charts. So if you look at if you try to analyze the markets from a fundamental perspective, I think you can really kind of trip yourself up quite a bit. I think the charts can really eliminate a lot of that uncertainty that that can come in.
Yeah, I totally agree. Just to kind of touch on both those topics, same. I find trading as one of those things where, doctors, surgeons, lawyers, you might have been widely successful in your previous, industries. And I mean, probably never failed at anything in life, right? And then you get over here to trading, and it's like, what in the world is going on? Like, I'm a genius, right? I don't know why this isn't working. Something's going on. And like you said, it's an entirely separate game, right? The mentality that you would have and the tools and expertise that you would bring over from your past career doesn't always correlate right here in trading.
Yeah.
And I think that's where a lot of people kind of get hung up at, just from that aspect of, I can't figure out why this isn't working. Right. But as far as discipline and just patience and coming up with a plan and being comfortable with randomness and knowing you're going to lose sometimes, that's a lot to take in, right? Yep. Especially if you've just been, again, wildly successful in your previous endeavors. So it's super difficult for some people to kind of bridge that gap, so to speak. So I think that's where a lot of people do fall short at. And it is always a good thing to live vicariously through others who've made those mistakes, right? To shorten that learning curve just a little bit.
Yeah.
Because
I think
everything.
Yep. Yeah, I was going to say, I think a similar kind of analogy to a successful trader is a successful sportsman or woman. They go in, they go into bat. They're not going to get a home run every time. Some of the top in football teams or soccer teams, as you would say, they don't win every match. They don't win by 4 or 5 goals to 0. You're going to have a bad day in the office, and when you're trading, very often you do. But it's knowing that you've got the formula and all the other things that go along with it, the discipline, the patience, as you say, and you'll win. It's not a sprint; it's a marathon.
100%. I say that all the time. It's not a sprint, it's a marathon, right? And just to touch on that analogy, like even with basketball, right? Like there's been times where LeBron James or Steph Curry or Kobe Bryant or, Michael Jordan, they get to the finals and they don't win. That doesn't make them not the best, basically. Like they're still the best in what they do. Somebody got the best of them this time. That's it. It's a this time, not every time type of thing. So super important to really grasp that concept, I'd say.
And if they play their game 10, 20, 100 times, then they will come out on top.
Exactly, right? They're just sticking with that same process. Like they're not going to change up their shooting patterns or their whatever patterns because they didn't win this time. Like, no, this works. The odds were in your favor majority of the time they are, but there's that randomness that we speak about again where, hey, fluke things happen sometime and you just lost this one. And that's really it, right?
Totally.
But coming back to it, just a little bit about me. I'm Mike. Everyone calls me FX Dinero. That's my trading name. I'm a trading coach for a few different companies that we work with. So I train and teach traders the same thing that we're talking about here, guys: discipline, following a strategy, mindset, just really grabbing a hold of their approach to the markets when it comes to trading consistently profitable. Been trading for this is my 11th year doing this. It took a lot. I was one of those people who it took me forever to grab onto this, right? Like literally I was failing for 8+ years at this. I always wanted to be successful at it though, right? Like some some people that grow up when they're kids, they say, hey, when I grow up, I want to be a basketball player or a lawyer or a doctor. I always said I just wanted to trade. I wanted to trade the markets and carve out my millions that way. So never gave up, stuck through it. And finally, right, over the past 4 years, I finally found profitability, learned a lot, right, over this decade plus about what it takes, what you're going to need, how to transition my mind and just look at things from a different vantage point, you know, to actually be able to handle this type of industry. Right. So, but yeah, I primarily trade currencies as well. Look at a few of the indices: NASDAQ 100, S&P, US 30, gold, Bitcoin. I'm only interested in buying Bitcoin if my trade sets up. And yeah, I'm primarily a day trader, guys. I'm in and out of my position the same day, every single day. I hardly ever hold trade to the next day. Yeah, I don't like to pay the swap or the risk getting gapped at that session changeover. So I'm in and out. And yeah, I'm a full-time trader for the past 4 years now. Yeah, just really enjoyed teaching and just sharing my expertise in this space. It's super fun for me. I really enjoy it. So cool. Well, yeah, guys, if you guys have any questions for me or Howard, please let us know. If you got like a chart you want us to look over or anything you want to point out today, please do. We're here to help. Jumping into it, I guess here, Howard, did you want to share your screen and then maybe go over some things that maybe you were looking at or
absolutely
anything like that, and I can kind of jump on after you.
Sure thing. 1 second. Let me just. Okay.
And please, guys, if you have any questions, please ask us. Ask away.
Okay, here we go. Okay, so as I say, I'm really a currency guy, so just kicking it off with euro dollar. Today I wanted to just sort of focus on euro dollar and dollar yen, the main FX pairs. So just to say that I usually start off with kind of monthly charts and weekly charts just to get my kind of longer term bias. And Elliott wave is my kind of tool of choice when it comes to longer term analysis and getting an idea for where we are within a structure. Elliott wave, by the way, is not for everybody. Many people they look at Elliott wave and maybe they try it once or twice and it doesn't really work for them. But one thing I've found that with Elliott wave analysis, it can give you some really good ideas, some really good things that other people are not necessarily seeing. And it's really about price structure. So ideally, what it's really about, the success comes from analyzing the price structure and not necessarily getting every single wave correctly. That pretty much comes out in the wash after the fact. But if you can identify a completion of a pattern, for example, a 5-wave pattern, which is an impulsive wave that goes in the direction of the trend, or a corrective pattern, ABC, which goes against the trend. So if you can identify an ABC correction, for example, against an impulsive move, then that can give you a pretty good idea as to what to do from a trading perspective. Now, I've identified such a thing on euro dollar of late. Let me just go through the chart. So what you're looking at right now is a monthly chart of euro dollar, and we formed a major low in 2022 here, 95.35, and we saw a first wave up, a first leg higher, and then we've seen an ABC correction down to the recent low at 101.77. So I don't know if you could actually see that breaks down into 3 waves, A, B, and C. And then this month we've started to see the acceleration higher. Now that for me suggests that we are in the very early stages of a 3rd wave higher, which should break above the high of the first wave. So what we're talking about is a reaction low within a new uptrend, which should carry euro dollar up here, a big move higher over a long period of time. Now this is this obviously ties in with a top in dollar index. I think the US dollar is headed down. So this is almost an inverse of the US dollar index. In fact, the euro is the main component of the weights within the dollar index, by the way. Now, another thing that I like to chuck in, I'm not a fundamental analyst by any stretch of the imagination. For my short-term stuff, I sometimes will use news as a bit of an indicator. For example, if we get a move on non-farm or CPI or FOMC, and that move gets reversed, then that can give me a clue as to which way the market is positioned. And the same kind of thing in terms of fundamentals on a long-term perspective. I tend not to worry too much about interest rate differentials and these kind of things, which sometimes can drive the market over the longer term. But one thing that that does kind of spring to mind on the US dollar, and particularly the euro against the US dollar, is that going back to President Nixon, all the way back, just literally at the start of the free float of the US dollar. If you look at all of the Republican administrations and compare them to the Democrat administrations over that entire period, one thing you'll find if you do the math, you do the study, is that typically Republican administrations have seen an average double-digit decline, I think about 14-15% in the value of the dollar over the tenure of the Republican administrations. And by contrast, the Democrat administrations have seen kind of 10 to 15% advance. So obviously we've just had a new administration come in, and this is starting to kick in, I think, in the value of the dollar starting to decline. So for me, the technical outlook for the long term for the dollar is down, for the euro against the dollar is up, and it's underpinned by the backdrop of the US political cycle as well. So that's really kind of the starting point for me in terms of which way do I think the macro picture is. So having said that, let's start to move into kind of more shorter term stuff, which is from a trading perspective. Obviously, that gives you a bit of a backdrop and maybe a bias to to use. From a short term trading perspective, I'd say my time frame is basically intraday for most of the stuff, but sometimes I'll hold things for maybe a day or two, a couple of days. So I'm looking really for the swing that lasts until the end of the trading day, or the swing that will last until the end of the next trading day. That's really kind of my time frame. Excuse me. And for that, I will use daily price bars or candles in this case. So what I tend to do is I look at the settlement of the previous day's candle or bar, and if it closed significantly lower in the bottom half or third of the range, that gives me the bias going into the next day. In this case, a bearish bias. So what I'll be doing the next day is I'll be coming in and saying, okay, the bias from the previous day is down. I'm going to be looking at my intraday charts to give me sell signals for a continuation of that move. Unless something changes during the day whereby we get a big reversal, in which case that will flip me the other side. So looking at the daily candlestick chart for euro dollar, this basically shows you that move that we've had this week, a big ramp higher in the euro against the dollar. So we had the big breakout of the resistance level, and now the last couple of days we're starting to see a little bit of upper shadows coming in on the candlesticks. So for me, I'd be looking for a bit of a corrective pullback going into early next week to give me an opportunity to have a crack at the long side of the market, I would say. That's really what I'd be looking for, some kind of corrective move after this this big thrust higher, because you're seeing people coming a bit late now. They missed the party and they're coming in, they pushed it up, and there's no real momentum. So for me, I'd like to see, and I think we will see sometime early next week, some kind of pullback, some kind of correction, and that will provide the opportunity to get long for the next swing higher. Just one second. So that's really kind of how I see this. So today was non-farm payroll day. We saw the push higher, and now we're kind of settling mid-range, and it's coming into the weekend. So people are thinking, well, there's not a lot to do now. So we're just waiting, I think, for the impetus for into next week. Maybe the president will come out with something interesting over the weekend, and we'll flip the other way. You know, we'll gap lower on Monday, and then we'll start to trend lower on Tuesday, and we will start to settle into some kind of trading range. So that's euro dollar. So really not a lot for me to say really on this one, I think, except the fact that perhaps we're a little bit overbought on a short-term perspective, that the long-term picture is very, very much bullish for me. On this chart, what do you think about this chart? Does it say anything to you?
Pretty much what you were just mentioning. People are kind of lost here. Maybe at the last little bit, people were kind of just jumping on. And I say maybe that was, again, a lot of people, maybe some people were wrong with the push up for the NFP move. But yeah, they're just kind of hanging out now. The whole thing's over with. I'm hoping no one's trying to jump on that at this late on a Friday, right?
Yeah. Oh yeah. That would not. I don't think that'd be a great idea.
Yeah, that's probably one of the worst ideas that they could possibly do. But yeah, it looks like people just were expecting it to go long, seeing it kind of was just hanging out for like some lows, and seeing that it already did recently put in that low. They were just kind of, hey, it's low. Let me just go long. I mean, if you were to guess longer or short, I guess you would say long. The gamblers took advantage of this fully.
Yeah. So So for me, there we are. I think it's just a case of probably stepping aside, and unless you see something on the intraday charts that really grabs you over the next day or two, I would say Monday, Tuesday.
Yeah, for sure.
So that's euro dollar. Yeah, moving on to dollar yen. Very often they'll do the same thing, but sometimes the yen just does its own thing. You know, the yen sometimes can be quite linked to the stock market. You get that risk on, risk off thing with the yen. And in fact, we started to see the yen, dollar yen, and the yen crosses start to come off a little bit. So typically the yen rises when the stock market is not doing so well, because you get a flight to quality. People, money goes back to Japan, that kind of thing. So just to sort of again look at the bigger picture for me, is that we've seen a big advance going way back to 2011, and in Elliott wave terms, an ABC, a 3-wave move for me: A, B, 1, 2, 3, 4, and 5 for C. So, and also the action that we've seen over the last few months, several months, is kind of topping action for me. You may well agree with that one. I don't know. What do you think on this? So
for me,
anything grab you on this one?
Yeah, so that looks like more of like a double top slightly, right? So I will be looking for a break below that previous that structure to the right, and then a retest of that. So I would like it to break below all of that area and then come back up to retest that area, and then I'll be interested in shorts there, but not before.
Yeah,
this could easily turn around and bounce off this level and go back long and take out the highs again.
Yeah, that's that. Anything's possible. Anything's possible. One thing I will say is zooming in onto the weeklies, is that if you're into Elliott wave and you're looking for 3-wave moves which are against the trend, I think we've just seen one here. So this one for me breaks down as A, B, and C. So that usually tells you that the trend is against that move. It's down. So we've had this big breakdown lower, which I think is the first leg down, and this is a correction that has finished up here, and now we're starting to break down in what looks like the next leg of this this bigger downtrend, and that for me would tie in obviously with my view on dollar index going lower, euro dollar going higher, and dollar yen obviously coming lower. Just zooming into the kind of more recent stuff here, we've just broken through that important point there, which is interesting. And it looks like we're going to close below it on a weekly basis. So last week we kind of had a look at it last week, and it was a very weak corrective bounce. So from a candlestick perspective, a very weak bounce. And this week we've just literally tried to break higher, and now we've done an outside week. And sometimes these outside patterns can be quite powerful, I think. Particularly when you it's like this one, for example, at the bottom. Very often you'll see these kind of outside patterns at the tops or bottoms, but this one looks like continuation to me. So it'd be interesting. I think going into next week, it looks like maybe we'll see a bit more downside action on dollar yen, purely because we've broken through this support level and closed below it by the look. Well, we've got an hour or two until the weekly close, but it looks like it's looks like nothing major is going to happen between now and the end of trading today.
Right.
So yeah. The outlook for me is still very negative on dollar yen, positive on euro dollar, and maybe just based on the daily stuff, we might get some kind of corrective move against the. Let's just go to the candles here, the daily stuff. So yeah, today, for example, a push lower, another kind of shadow forming here, a lower shadow. So maybe a little bit of sideways chop here just to shake out some of these weak shorts going into Monday, Tuesday. And then we start to see a bit more aggressive selling, I think. So yeah, that's really kind of the outlook. Again, in terms of shorter term stuff, trading wise, the strategy really for me has been just kind of going with the previous close. So, for example, if we've had a strong red candlestick, then looking for the bounce intraday and then the breakdown. And one thing I like to use for these kind of shorter term things is let me just I seem to have 1 second. Let's just go 30-minute hour. Find it. Looks like my chart has frozen up a little bit.
Oh,
That's not
no
good.
worries.
Let me see if we can go. Let's go default layouts. No, let's try that. Okay. Yeah, not sure why that particular one is frozen. Maybe if we try this one, just while I get the hang of this one. Okay, we'll go to 30 and 1 second. Let's just put in our price channel. Okay, and we do a 12 price channel, which tends to be quite a good one for this.
Okay, sweet.
Okay, so what typically what I like to do in terms of entry and exits is start off with a daily candlestick. If the daily candlestick from yesterday is particularly red, that gives me a bearish bias going into the next day. Then what I'll do is I'll look for a break of the upper channel against the daily bias, and then followed by a break of the lower channel, and that gives me the signal for the trade. So in this case, this was. Yeah, so not taking every long and short on the channel, only taking that the trade in the direction of the daily bias.
Right.
So at the end of this day, for example, daily bias was negative. Early next day, you get the break through the top, that gives you the trap, and then the break through the bottom is the signal. Okay, so
nice.
then looking for the continuation of the previous day's bias. I had quite a good one on dollar Canada yesterday, using that particular stance, whereby the close on dollar Canada previous day was 1 second. A change in the time frame, but it's not really responding. Bit weird. Okay. So just 1 second.
Maybe try to refresh the screen. See if it works.
Okay. Give me a clue. Where's the refresh button?
The top left, like under their trading platform, like really a little bit higher. Go up.
Oh,
like that button right there. Yeah.
Gotcha. Okay. Yep. Okay.
Yeah. Sometimes it's a little finicky.
Any second now.
Yeah. I have to do this every now and then, so.
Yeah. Yeah, just coming through. Okay. Yeah, so basically, yeah, before it comes up, so the candlestick from Wednesday on dollar Canada was a very bearish red candlestick. So using that methodology, what I did was I waited for the upside break of the 30-minute channel to give me the trap signal, the setup, and then the entry came on the break through the bottom of the channel, and then that led to the big decline into the low. Yeah, it looks like we've got a bit of an issue here. Let's just.
You know, I was just going to ask.
I guess maybe while I'm waiting for this to come through, if you want to go ahead.
Yeah.
Just to keep the flow going. Just 1 second. Okay, yeah, I'll come back to that. If you want to go ahead, it's just coming through.
Yeah.
So.
No problem. Let me go ahead and share my screen. Entire screen here. Okay, sweet. So, as previously mentioned, today for me, guys, is, you know, like, remember you were in school and you had half days, you couldn't wait for those half days, you feel like you only had half the work to do. That's me today on NFP days. I get one of these a month on NFP Friday. So I'm more passively watching it, not fully engaged in it. Set a few alerts, and that's pretty much it. But I did see two possible setups, right? And they were on, I believe, EJ and GJ, right? So yeah, this is one of them on EJ. We'll go through that in a second. And then the second one, I believe, was GJ. Yes, so EJ and GJ were decent for me. We're going to start with GJ, actually, because this one for me was closer. Now, even though both of them were kind of close, the difference is which I'm going to point out to you in a second here. Right. So let's start with EJ. In fact, I'm going to point something out to you guys. So for those of you who have been following for the past few sessions, majority already know, like, my trading style, which is a market maker structure and order flow, right? So I'm looking for where traders are trapped. I'm looking for that market structure. I'm looking for that pattern. I'm looking for higher time frame confirmation, right, on the 4-hour chart. And then I'm looking for an entry signal, right? So just a quick recap of what's actually on my chart, so we're not too confused. At the top here, I have the actual charts, right? And then at the bottom, I have my TDI, which is my Traders Dynamic Index, right? So there's two things going on here. At the top, now these two have to agree, as I always say. The top chart has to agree with the bottom TDI here, right? So coming into it, just to kind of explain what I have on my chart, then I'll explain the TDI briefly. Just a quick recap. I always like to go over these things so you guys understand the terminology and what we're actually looking at here. But I have some EMAs here, and then I have two other types of, I'd say, indicators, in essence, to kind of just give me a little bit more extra data. Then I have basically a summary of the same data on the right-hand side here, right? So going into it, I have these EMAs here. The white one is the 200 EMA. The baby blue one is the 50 EMA. The dark blue one is the 800 EMA. And then the red one is the 13 EMA, right? And then I also have, if you can see these dashed blue lines, these are what we call blue tracers. And this is basically yesterday's high and yesterday's low. You can kind of see that going throughout the entire chart here. So those would, in essence, be areas of interest. Those areas would be areas to watch out for. Those would be areas to know where traders are probably trapped at, right? In addition to other things. And similarly, I also have these dotted orange lines, right? Which is my ADR low and then my ADR high, right? Average daily range high, average daily range low. Okay, so that's what's going on in the chart here. And then at the bottom, I have my, as I mentioned, my TDI, which again is the Traders Dynamic Index. It's kind of a few indicators kind of jumbled and put together. But it gives me a great sense of where everything is, right? So you guys probably know a few of these, but the blue lines on the outside is my Bollinger Band. The purple looking line is my RSI line, similarly to like on a regular RSI. The pink looking red colored line is my signal line. Then this yellow line here is my market baseline, which is basically it's a liquid 50, so it actually moves along. Then I have this last dotted line here, which is my static 50, and I call this the static line, right? So that's it. This is everything that's in a TDI, right? So again, these two things have to agree when it comes to looking for trades, right? Now, just to kind of go through my process and like what I'm actually looking for here, guys. Every single time, anytime you guys attend a session, you're going to notice I do the same thing. My routine is through the roof. All right. And this is, we're going to have a podcast coming up on Monday, guys, and talking about, like how we became profitable. And this is it. My routine, my routine, my routine. I'm one of those sticklers for being punctual, following the same process. And this is just one of my strong suits, I'd say, which kind of correlates and helps me out when it comes to trading, right? So getting into it, the very first thing that I'm looking for is that I need to know is, as always, where am I in the MM cycle? Right now, MM is market maker, right? Because I'm trading the market maker cycle, which I'm going to show here in a second. Right. So this is the first thing, right? The second thing I need for confirmation is a pattern, right? The next thing I would need is higher time frame confirmation, which I'll put here in 4-hour chart. And then lastly, I need an entry signal, right? So this is everything I'm really dialing in on when it comes to if I'm going to take a setup or not, right? So where am I in this market maker cycle? That's the first thing I need to figure out. Like if I'm going, where am I going? Am I at a peak high? Am I at a peak low? Am I level 1, level 2? Like where am I exactly so I can figure out my bias for longs or shorts, right? So that pattern, as I always like to point out, guys, it looks similar to this, right? There's this double top action. There's this break below structure, right? There's this retest to the same area. There's another break below that area, one more retest, and then it's going to break again below that. And then it starts to cycle all over again, right? This is my market maker cycle right here, right? So just to kind of give you a little bit more context here, this area, which is my peak high, and this area, which is my peak low. I'm just going to put peak here because it's really the same thing, just based on which one you're actually looking at, right? Let's put it there. Okay, all right. So this could actually be the exact other way around too, guys. Like this could totally be going the other way. It's just the same exact structure, just the other way around. Okay, so this peak I am not interested in, and this peak I am not interested in, right? I am only interested in these two levels, right? Which for me is level 1, right? And then, whoops, this second level here, which would be this level, level 2, right? I'm literally only interested in these two exact points, right? So I'm interested in taking shorts here, and I'm interested in taking shorts here. That is all right? Now, obviously, if this were inadvertent and it were the other way around, I'll be looking for longs in this spot. As a matter of fact, I'll draw that really quick. So let's just say, hypothetically speaking, I'll just do a shorter one here. Whoops. All right, so same exact thing. If we were looking for longs, I would only be interested in this move here, because then that's level 1, and I'll be interested in this move here because that's level 2, right? So same exact thing, is just inadvertent, as you guys can see, right? I'm staying away from this, and I'm staying away from this. Part of me figuring all this out is me stop trying to take peaks, right? Because you never know, this thing could just keep going higher and higher and keep stopping you out. This thing could keep going lower and lower and lower and keep stopping you out. So I avoid peaks. I only trade the continuation of the new trend, right? Which for me is level 1 and level 2, right? So this is what I mean when we're looking at number 1 here, when I say, where am I in the cycle, the market maker cycle, right? So I need to identify, where am I? And my very first thing I'm looking for is, can I find a pair, an indice, a commodity that is in level 1 or level 2? That's the first thing I'm looking for. When I go through all my charts, where am I in this level 1 or level 2, right? If I'm in a peak, if I'm in a peak high, I'm not interested. I'm moving on to the next one. If I'm in a peak low, I'm not interested. I'm moving on to the next one, right? So this kind of gives you an idea. Just want to preface this so you guys really understand when I say, where am I in the cycle, right? Now, I'll go ahead and erase all of this. Now, when it comes to this cycle, I can see here, right? Just to kind of point this out, guys, you can see that you have that W structure, right? Right? Then you have this. Let's scoot this over. Right? So you have this W structure, and my next move would be, right? I'm looking to go long here, right? Once again, this is that level 1, right? Now there's a few things going on with this one that I'm going to point out, and you'll notice on the next one is a lot easier. This is actually in level 2, and I can tell this is in level 2 because I have a 1350 cross, so the blue EMA crosses the red one, and I have a blue one crossing the white one. So the 5200 has crossed and the 1350 has crossed. So that signifies to me, right? And I'll point to this. This is, for me, this is level 2 because we have a 1350 cross and we have a 5200 cross, right? So this lets me know I am in level 2 at this point. If it were in level 1, only the 1350 would cross. The 5200 would not have crossed yet, right? So in this particular move, I'm not actually interested in this move coming off the 50. I am more interested in this move. Oh, whoops. I'm more interested, since I have this, I'm more interested in the move coming off of the 200 EMA and going long like this, right? My stops would be here. My entry would be above the 50 and my target would be this high here, right? Which is also at the ADR high. This would typically be the move that I'm looking for, right? So if I were to throw the strings on here, all right, put my stop below here and my TP will be up here. As long as it's a 1-for-1, which you can see it is, it's risking $1 to make $1.05. This is good to go for me, right? Now, even though this is working out, I'm sorry, I skipped one step. So how I always mention that the TDI and the chart have to agree, there's some things I'm also looking for on the TDI, right? So the yellow line, keep in mind, is called the market baseline. And you see this is pointing down, like this is a pretty steep angle pointing down, yet the chart is going up. This does not give me confidence that this is going to continue to go up. In fact, I'm actually looking for the real move to happen, which would be this M off of this 200. And I can tell also because the market baseline is slanting down, I needed to come and go below this static and make a move like this, right? And this is what I call my reload, right? Because simultaneously, these two things are happening, right? There's pending orders going short below this static 50 line. So I need the market makers to step in and ping on or activate these orders going short first before I enter the trade. Because right now, they're just accumulating contracts. You're accumulating orders at this exact price here, right? They're just messing around. There's not too much going on. And there's no reload here. So for me, there's no trade, right? I actually need, can I remove this? Yes, I can. Okay. So I'm actually looking for this to come down here and make the move like this, right? And it needs to be off of this 200 EMA. This move, this pattern, as you guys remember, my second thing was I'm looking for some type of pattern, right? So after I know why I'm in the structure, which I found out I'm in level 2 because I have the 5200 cross. The next thing is the pattern, right? So I'm looking for some type of W structure off of this 200 EMA, right? In addition to that, I also need this reload to happen, right? So I need both of them, not just one. I need both of these to actually agree with one another, right? So for me, this is nothing just as of yet, because again, there's no reload. Now, this could, of course, it could just go up and not give me a reload and, you know, and and just do its thing and run on up. Of course it could do that. However, for me, this is not a setup. This is not a valid setup, right? Because again, there's no pattern off of this 200 EMA. So although I was looking for this to actually set up, right? Initially, there's no pattern here. So I'm stopped in my tracks even looking at this pair, right? Because even though I found I was in level 2, next we'll be looking for the pattern off the 200 EMA, and there's no pattern, there's no reload. All of this is a pass, right? So this was nothing for me, right? So this was just one of the two I was looking at. And I wanted to start with this one because GJ is closer to setting up than EJ. And reason being is this one actually has the pattern off the 200, right? Let's take a look at this again. You see how the price is actually touching the 200 on this one after we have our 5200 cross here, right? We have our 5200 cross, 5200 cross, right? This signifies we're in level 2, right? So we're in level 2, right? And when we're in level 2, remember we're looking for W's off the 200, M's or W's off this 200 actually. In this case, it's W's because the 5200 has crossed to the upside, right? But take a look at this, how price is actually going off of this 200, and then look at EJ. You see how we have the cross, but price has not come and touched the 200 EMA yet, right? So clear pass, I'm not interested anymore. But again, on GJ, now we're talking, right? Now we're talking, guys. So let's just do this. So let's kind of pull this back up here. Where am I in the cycle? Right, 2, pattern, right, 3, higher time frame confirmation, and then 4, right, entry signal, right? So cool. So with this being said, let's just kind of keep this close, right? So we can kind of keep this above. All right, cool. So now that we have the 5200 cross, next we're looking for that, right? For that pattern, because we got this W structure. Remember, this is how it goes. the run, and then you're looking for this to come down and make some type of W structure, which is kind of a W, double W here, but that's still fine. I'm totally fine with that. Right, this is much closer than EJ was, for the simple fact that once again it's actually touching. There's interaction with the 200. It's actually touched it, and it's making that pattern, right? So I have my second one. It's checked. Also, as I mentioned, right, on the TDI, how the TDI and the chart have to actually both agree, right? So remember on the last one, let me go back to EJ really quick. If you remember how EJ, if you look at the market baseline, it has not gone below the static, right? It's just now getting to it and touching it basically, but it's not gone below it, right? That is not the case on GJ, right? If you look at this, you can now see that the market baseline has crossed below the static right here, right? So now we get into some good stuff, right? So we're looking for this. We have this. This is what I call, again, that reload, right? So we now have a reload, right? So this is looking good. All of these traders, market makers have activated these orders going short, and they're pulling this away, right? So this is looking great, right? So we got checked off number one. We know we are in a cycle. We're in level 2, right? Because of the 5,200 cross here. Do we have a pattern, right? Yes, we do. We have a pattern off the 200 EMA. So we know, we have a nice W structure off the 200 EMA, right? We also have our reload, right? Market baseline has gone below the static, and it's going to start tilting back up. You can even look at, if you look at the market baseline right now, you can see it's starting to point back up. It wants to do this exact movement, just kind of come and scoop below or just kind of come on back up, right? That's them activating the short orders below this price level, right? And then just they're starting to yank it away from them. That's why you see these last 2 candles are decently sized, right? This next candle is closing in 8 minutes and 20 seconds, right? So we have 2 of our 4 boxes checked off, right? The third thing I'm looking for, as you can see, is higher time frame confirmation, guys. What does that mean? It means I need to kick it up to the 4-hour chart, right? Kicking this up to the 4-hour chart. What do I need to see for my higher time frame confirmation? Nice and simple. This one's easy. The only thing I need to see is the candle close above the 13 EMA, right? So if we zoom all the way in here, right, we can see that this last candle here is the 13 EMA is the red one. Keep that in mind. This last candle, it went up, but it came back down, right? And it's below the 13 EMA, right? So this is below. So at this particular point, I do not have my number 3, which is my higher time frame confirmation. However, right, actually, we won't get 4-hour confirmation because this candle doesn't close for another 3 hours, right? But you can see this candle is attempting to close. Well, it's above the 13 EMA now. Now, you can't take this on an open candle. The candle needs to already be closed and be above, right? So this would need to have been closed, which again is not going to do in the next 3 hours because that'll be the end of the day, right? But this would give me higher time.
You're going to be up in the Asian session on Sunday night.
Exactly. Exactly. So we got to see what this happens. And for me, that would make sense, right? Because GJ, one of it is an Asian pair, JPY. I would totally take this, right? Now, I don't like to take trades on Sunday. It does have to be beautiful for me to take it. If anything, as I always mention, guys, I'm just lowering my lot size, right? So I'm putting maybe half my risk that I would typically put on. Because if it goes against me for whatever reason, I don't want to take a full hit on it. I'd rather just scale it down a bit. But one thing's for sure is I can't not take the trade. Like, I have to take it. So yeah, once this closes, then we will have the 4-hour confirmation, right? So just coming back to it here. Now we're back on the 1-hour chart, guys. So we pretty much have a lot of what we're looking for, right? Even though this candle is going to close, this one's going to close on the 1-hour chart, it's not good enough because we don't have the 4-hour confirmation yet, right? So we will definitely need the 4-hour confirmation. And then the last thing, as you guys saw before I deleted that, was we need an entry signal, right? The entry signal on the 1-hour chart would be a close above the 13, right? Now this is going to be backwards, basically, because we're going to get a close here above the 13 in the next 5 minutes, but we will be missing the 4-hour confirmation, right? So only 3 of the 4 will be matching up, which for me is not good enough. It's a hard rule for me that you need the 4-hour confirmation because that gives you that higher time frame bias, right? So you have to have that. But in essence, this will be a nice setup on GJ going long, right? All we would need is this 4-hour candle to close, and this will be a great setup. And then just to touch on this really quick is, I think I might have mentioned this to you guys before, but I have 5 setups in my playbook, right? So 1 is my master trade. 2 is my combo trade. 3 is my ID 50 trade. That's the only trade I take on the 15-minute chart. 4 would be my M or W off the 200, which is this trade, right? And then 5 would be my coffee money trade, right? Now these setups, they have their own risk management as well, right? So for me, this is an A setup. Right? This is this is an A setup as well. This is a B setup, right? M or W is a B setup. And then my money trade is a C setup, right? So with that being said, I also have to risk it appropriately, right? So I put on 1% on my A setups, right? On my B setups, I'm doing 0.5% to 0.75%. I guess I could just copy this here. That's smarter. Right, same thing here. And then on my C setups, I'm doing 0.25% to 0.50%, right? So even with all of this said, oops, I don't know why that didn't pop on there. Let's take a second. Oh, there you go. All right, so as you guys can see too, this candle's got some thrust to it. Like this candle is trying to take off here. Even late in the day, right at 2 o'clock, it's got some push to it. So cool. So seeing that this is the MW off the 200. So this for me is a B setup, right, guys? So as you can see, I still wouldn't even put my full position on this trade. I only put my full position on my A setups. This trade for me would be at 0.5 to 0.75%, right? Depending on how clean it looks, how confident I am in it. If I have some extra bias, maybe towards like fundamental bias, things like that, then yeah, I'll probably be a little bit higher leveraged on it at the 0.75. But anywhere in here is good, right? So in this particular setup, it would literally only be probably a half to 3/4 of a position on this particular setup. But yeah, that's pretty much everything I have for today. Yeah, just those two. That was pretty much looking at EJ and GJ. And then yeah, guys, just to kind of close it out, just to have this, it's super important to not just take trades, right? Like if you don't have a playbook, it's kind of hard to really tell where you are in the cycle, right? Because you don't know if you should risk more, if you should risk less. You haven't fully identified every type of setup, its characteristics, what it tends to do, the hit rate, you know what I mean? Like how profitable you are on it, what R to R it tends to give you. All of these things are super, super important when it actually comes to risk management, right? And just tracking your trades and being able to overall identify your setup, right? Like no matter what trade I'm taking, it's always going to fall in one of these 5 types of setups, right? So once it's fallen in one of these 5 types of setups, I also automatically know the grade that it's getting, whether it be A, B, or C. And then with that information, I can position myself properly as well, right? Whether it's a full 1% position, whether it's a half, a quarter, 3/4, whatever that may be, I'm able to identify that, right? Because I have my setups actually named. So just wanted to point that out there. Super, super important to have that as well. As you guys can see, this candle has closed, right? Obviously, we don't do sessions on Sunday, guys, but take a mental note of GJ longs and see where it ends up at on not just on Sunday, but maybe Monday. And just know our target is here, right? But just remember, you have to wait for that 4-hour confirmation. And yeah, the target is all the way up here at this high, right? So, but cool. That's all I pretty much have. And guys, if you look at this market baseline, you can see it's starting to slant back up to the upside because they've already dipped down below. They pinged on enough traders and activated those short orders. They're trying to get they're trying to get out of here now, right? They want to pull it away as quickly as they can, and just put those traders in even further panic mode, being in shock, saying, hey, I don't know what to close it. I don't know if I should double down, reverse my position. They don't know what to do, right? So market makers want to get out of here fairly quickly, right? And this is a pretty pristine setup, guys. The only thing it's really missing, as I mentioned, is this 4-hour confirmation, right? Seeing that this candle is closed for another 3 hours, there's nothing there just as of yet, but this is nice, right? Like this is a nice setup, just really nice. Had this not been Friday, maybe like Monday or Tuesday, Wednesday, or a Thursday that's not NFP, I'll be looking to take this in Asia for sure, as long as it's 4-hour confirmed. That's the last thing it's missing, is this, as I mentioned, this close above. And it's going to be really nice too, guys, because not only is it going to close above the 13 EMA, it's going to close above this 200 EMA as well. And it has nothing's in the way. It can just run, right? There's no EMAs. Price is closing above the 50, the 13, and the 200 EMA. Nice, decent sized shift candle. It's shifting the zone, right? And this can easily run all the way up here to the 800 EMA. Tons of space to do that, right? Let's say if it did run up there, you're risking $1 to make $1.37. So great risk to reward on this one. Obviously, I prefer one to twos, but 1-to-1s are like minimum that I'll take, especially on a pristine setup like this. So, yeah, that's pretty much it on my end. Did you have any questions or like wanted me to point anything out here? Anybody got traders?
Looks good to me.
Sweet. Okay. I know your screen kind of paused up. Did you be able to get that back up in action there?
We're good now. So shall I?
Yeah. Okay.
I'll just go. 1 second. Okay.
Yeah. Perfect. So I just stopped sharing. You should be good to go here now. Hope you guys enjoyed that.
All good. Okay. Can you see my chart? Does it come through?
Yes,
okay?
I can see it.
Cool. Excellent. Okay. Yeah. So what I was talking about was a trade that did yesterday on dollar CAD, just to give you an insight into the kind of the more shorter term stuff that I like to do. As I say, what I like to do is wait for a strong directional candlestick, whether it be up or down. So a strong green gives me a buy bias the next day, like that. and a strong red gives me a sell bias for the next day. So essentially what I'm doing is I'm looking to go with the momentum from the previous day, because typically the market likes to try and have a push in the direction of the previous day. Now it doesn't always follow through, but that's that's part of the game. You have to manage things. So the setup for me, this is one of many setups, by the way, but this particular setup is obviously the first thing is to look at the previous day's closing daily candlestick. So if I get a strong red, for example, then I'm looking to go short after a qualified pullback the next day. So what is a qualified pullback for me? So you kind of three-step process really. The weak close, that's the strong red candlestick, or the very weak red candlestick in this particular case. That gives me the bearish bias going into the next day. So the first part, and I guess a little bit similar to what we were talking about before about looking for traps, markets tend to want to go after, the real move tends to come after a trap once they've sucked in a lot of the uninitiated, shall we say. So we have the first step is obviously the bias, which is the number one, the weak close from the previous day. So I'm coming in the start of the next trading day thinking, okay, I want to sell this market, but I want to sell it once I'm confident that enough people have been trapped into going long. Now that's where the number two comes in. The next day we get a break of the channel high, which is right here. Okay, so we've got people coming in trading against the previous day's bias. Okay, now very often these guys will be trapped, but sometimes they'll be right. We get a move and up it goes and it continues for the rest of the day. Not a problem, because we're waiting for the trigger, which comes at number three. So the break of the channel to the upside, and then tops out, and then the break of the channel to the downside, and that is the entry trigger. Because what you're doing is, with the bigger time frame, you're taking a short-term sell signal in line with a bigger time frame which is bearish based on the week daily close. Okay, so the one is the bias, two is the potential trap, the people coming in trading against the bias, and then the three gives you the entry in the direction of the previous day's bias. Now what I tend to do is, once I've got the entry, is my stop is usually the other side of the channel. So in this case, the channel was, I think, 35, 36 pips or something. And then I'd be looking to take partial profits at distances based upon the risk amount. So PT1, take 50%, PT2, take another 50%, like that. And then that's the end of the trade. That's essentially what I'm doing. Then move on for the next one. Sometimes you will get another chance to enter if it's a big trend day where the market hits your targets, bounces up, and then breaks again. Then there may be another opportunity to have another crack at it. But that one I would typically do in smaller size, because the real energy comes on that realization that the previous day's movement is starting to resume. So you don't really want to be risking you don't really want to be risking too much on the next one. In fact, you might want to be waiting to get in closer to the pullback if you want to be trading the next leg down. But for me, the real money comes on that breakout in the direction of the previous day's bias. And typically that's what you tend to find with the price action. You tend to find on most of these markets, it tends to want to run for 2 or 3 days, sometimes 4 in this case, and then we get a bit of a turn. So if you know that you've had a turn day when you've gone from green to red or red to green, it gives you a clue that maybe there's a bit of a momentum for the next couple of days, and you can use it that way. So that's really kind of the thought process that goes into that short-term stuff. Pretty much, if it's in line with a bearish bias on the even bigger time frame, for example, the monthly, which it is, because I think that dollar Canada, for example, has made a major top. We've had this bearish outside month, which can often give you a very important clue as to a major turning point, bullish outside month at the bottom. So yeah, so essentially looking to trade in the direction of the previous day's bias, adding a bit more size if that's in line with the larger time frame bias for me. So that's really just sort of an insight into the kind of trades that I like to do. Any questions on that one?
Nice. Yeah,
No.
so I was going to ask you, like, at what point would, like, when it does break, let's say the overall trend for the day is down, right? And then it broke up, but that wasn't the signal. But once it broke back down, you shorted it to go, to continue the bias for the day. At what point will you stop, like, shorting it? Or, like, at what point will you say, all right, I guess that's short enough, let's turn it around and go for longs? Or, like, how do you know the bias, the overall bias is changing?
Okay. So typically I'm coming in with the bearish bias based on yesterday's candlestick. I would want to see a very deep retracement of yesterday's candlestick for me to turn the bias around. Like, for example, today we've got that. So yesterday obviously was a bearish day. Today we've had a nice bullish day, and it's just coming off the highs. So this is going to be a bullish day. I'll be looking to buy into that on Monday, using the same methodology as I've done to sell today, or yesterday rather.
Gotcha. Okay, so you're really basing off yesterday's higher.
Yeah.
Okay, that makes sense.
Exactly. Yeah. So I guess in terms of price structure, we've got a nice upwardly trending price structure. So I'll be looking to have a crack at the long side, assuming that we stay here by the end of the day, in a similar way to going short on this particular move yesterday.
Gotcha.
So that's really sense. So I'm not really looking at the individual candlesticks on the shorter term time frame. I'm not really that micro. I'm much more concerned about the how was the structure of the previous day's action, and the likelihood is that the previous day's action will at least have an attempt at continuing. It may not succeed, but there's a strong chance that you can make some money on the attempt at resuming the previous day's price action. And I've got a number of other signals that I use, but this is one I really wanted to kind of show people to give them an idea as to how I look at these things during the trading day, and what for me constitutes an opportunity. I wouldn't say I'm particularly indicator based. I'm very much price action based. And for me, the most important thing really is the close of the day. What did it do in relation to the day's range, and that for me gives me all the signals that I really need for the next day.
Gotcha. Okay, yeah, that definitely answers my question.
Perfect.
Okay, it says we have an Instagram live. Looks like we got a question here from the Instagram live. It says,
oh, here we go.
What's the 800 moving average for, and what's the 400 moving average? Kindly type the answers.
Yep, go ahead.
Okay, so do you have the 800? Okay.
I think that's for you. That's for you, isn't it? I think.
Okay, so yeah, let me mention them back. So in essence, the 800 moving average is a long-term bias, and it's actually, so he asked me about an 800 and a 400, but it's actually a 800 and a 200. It's actually a 200 EMA, and that is simply for a shorter term bias of direction. Yeah, I use them like landmarks, basically, guys. Yeah, just to kind of see overall where I am, because when those EMAs cross, they kind of help me see what level I'm in. Helps me see what level I am in. Hope that helps. Yeah, it just basically, I can actually go through a few of them just so you can kind of get a better understanding here, right? Because you guys pretty much seen when the 800, when the 5200 crossed, it kind of gave the particular, it let me know where I am. But let me see. So for something like this, right, I can see that I can, and this, I've been doing this for quite some time, so I can easily tell. But for something like this, I can tell that I'm definitely in level 3 down here, right? Because I have my 5200 cross there. Then I have my 800, 200 cross here, right? And then I'm just still going down. And I can also tell because the EMAs are kind of fanned out here. Like, look how far away the 50 EMA is towards the 200. This is quite a distance. This lets me automatically know that I'm in level 3. Like, I can automatically tell this. Whoops.
Okay. Do you want to show you? Do you want to show your screen there? I can't.
Oh, I'm sorry. I thought I was sharing my screen. Is it not showing up here?
Not come through yet for me.
Okay. Can you see it now?
All good. Yep. Lovely.
Yep. Okay. Perfect. Sorry, I'm not sure what happened there. So yeah, I can automatically tell that I'm in level 3 with this, right? Because I got my 5200 cross here, and then I have an 800, 200 cross here. And the EMAs are really fanned out, right? So I can automatically tell that this is level 3, right? So we can also go to another one, right? So let's look at GA. GA I was looking at yesterday, but it never set up. As you can see, this is why I have my alert here. GA look, but it never got to this price. It just kind of went back the other way, right? So let's kind of dissect this a bit further, right? So that same structure, guys, right? I got my M structure. This is kind of just coming down. I was expecting this to come up and hit the 50 and then drop to the 200, right? How I keep drawing this same market maker structure, right? That's the move I was looking for, right? It was right here. This is this move right here, right? I can see something that's fresh too is, now remember, you see I have a fresh 1350 cross here. So I can easily tell I'm in level 1. The 50 has not crossed the 200 yet. So that's how I know I'm still in level 1. So just to kind of answer your question a bit further, right? The EMAs help me see where I am in the cycle very easily, right? So I can easily see how I've been drawing quite some time here. This is peak. This is peak high, right? This is peak high, and this is also level 3, right? So level 3. This is what I mean when I say I stay away from this part, because this can keep going. You see how it did? This can just keep doing this as much as it wants to. So I tend to stay away from that. My move is right here. Once I see this 1350 cross, 1350 cross. Yeah, once I see this, right? So that red and blue are crossing right here. The very next thing I'm looking for is the very first, you guys will probably grab this. So after 1350 cross, the very next thing I'm looking for is the first pullback, PB is pullback to the 50 EMA, right? Literally, that's literally the very next thing that happens every single time, right? Well, obviously when it sets up, it can't be when it doesn't. But the 50 EMA in this little diagram, the 1350 has crossed basically somewhere in here, right? Like hypothetically speaking, this is the same thing, right? Like you can see this M structure to the left on the chart. You can see this 1350 cross. It starts to kind of go down and it comes back and retests this same area, right? I drew this on the chart yesterday, but just look at this ping, guys, right? Like if you just look at this, actually, I'm going to draw a line here. If you look at this right where this wick is, it's not a coincidence that price comes back and touches it right here, right? In this same little area. Like, why does it do that? Why, out of all places to touch, why does it come back and just touch this little bit right here, right? Now, this didn't fully confirm for me. Actually confirmed way too late. I went over this. There's some things that needs to happen on the TDI, right? So even though this kind of closed below the 13, what I also need on the TDI to happen is you can see how this red line or pink line, whatever color it really is below the market baseline. That's a no-no. In this particular example, the TDI is out of order, right? I need the TDI to look right. It would be the RSI line and the signal line, which is the pink and the purple line. It will be above the market baseline, right? If it's not, it's the indication it's not ready yet. I correlate it to it's still cooking, right? It smells good. It probably looks good through the glass. You know, you can hear it sizzling, but it's not ready yet. Like it's just not ready yet. So this has to come up. Now, if you look over here, right, where this horizontal line is, now you can see that the purple line and the pink line is above the market baseline. Now we're talking, right? Now we're looking for a good area to go in, right? So once you see this big red shift candle, this red one here closes, this ideally would be the opportunity for the shorts, right? Let me throw this on here, right? Your stops will go above here. Your target would be the 200 EMA. But what's wrong with this? Why can't you take this trade? Look at the R to R. It's backward. You're risking $1 to make 57 cents. And for me, that's a no-no. You can't risk more than you're going to make on trades, right? So, yeah, this is why this was a pass for me yesterday. It was close. It was super close, but it was a pass overall because the R to R didn't make sense. And you guys have to always remember that, like, you never want to take a trade where one, the R to R is off, because over time, that's just not a profitable strategy, right? Like you can't keep doing that. I understand you have to have a tremendously high hit rate for that to work. Because you can't take one step forward, but every time you lose, you take 2 steps backwards. Like that will not work in the long term. Unless again, your hit rate is super, super high, right? But yeah, so just coming back to it, I'll erase all of this. I hope. Can you see this, Howard? Like, does this make sense? Do these two look alike to you?
Yeah, absolutely. Yes, it's the same structure, isn't it? Yeah.
Yeah, same exact structure, right? Same structure, right? And again, once again, from here, this is where I'll be looking to enter that trade. This is just the cross. I'm going to erase that, not to get it confuse anybody, but this is the money zone right here, which again, you be coming back to this area for the retest, right? So you got the break of this area, run, and you pull back to this same area. You want to smack it right there and go for the short, right? That's the same exact thing that's right here. However, as we mentioned, remember, I know why I'm in a cycle. I can see I'm in level 1, coming out of level 3 into level 1 because I have my 1350 cross and my 5200 have not crossed yet, right? I'm looking for a confirmation to go short towards the 200, like in this example here to the left, right? So we know we are in a cycle, right? We have a pattern. Right? We have the first pull back to the 50 EMA, right? Next one will be higher time frame confirmation. This was already below the 13 EMA, right? As you can see on this. So we have our higher time frame confirmation. We're 3 out of the 4, so we're all good, right? And then you get here and then you notice that the R to R doesn't make sense, right? So you have to let it go. I'm telling you guys now, even in situations like this, don't get greedy. Don't get antsy, don't get emotional and say, man, I haven't taken any trades all week. Or, I lost my last 2 trades. I need to make my money back. Like, that's not the right approach. I promise you, if you can just stick to your guns and plan, overall, guys, it'll work out, right? You just have to have a large enough sample size, if anything, right? But yeah, as you see, we had 3 of the 4 check marks, but the last one just did not go for us, guys. The R to R did not make sense, so this was a pass. Right, and then just going even further, if I take all of this stuff off, I'm going to erase this too because it never came back. Had you taken this trade, right, it wouldn't have worked. This is exactly why you have to stick to your guns, right? You would have took it here, stops would have been up here, TP would have been here, right? It did not work. As you can see, it did not work.
Yeah, not every trade's going to work.
Not everyone is going to work, and it's good to me. This is what I call, this is a win, not just on my process, but for the day, right? Like, remember, no trade is still a trade. You can either decide to take trades and win, take trades and lose, or pass on trades and just be even for the day, right? For me, this is 2 wins. I didn't lose any money, even though I didn't win any money. That's totally fine for me. But on my process, this was a super win, right? Because my process told me I shouldn't have taken this trade, and I didn't. And look what happened. I would have lost. Had I broke my rules on this trade and just got emotional and jumped in, I would have lost. I would have been upset afterwards. Like, man, I knew I shouldn't have took that trade. So it's super important, guys. Now, I wouldn't have gotten stopped out on this trade, even if I did take it, because for me, once it closes below the 13 EMA with the confirmation, that's when I'm in it. But once price closes back above the 13 EMA, so it would have been this green candle right here, I would have closed the position here. So I wouldn't have fully gotten stopped out at the stop out here. I would have closed it here because this is the first green candle that you can see that closed above the 13 EMA. So I would have closed it here. But the point is, I still would have took a small scratch. Yeah, I wouldn't have lost my full 1% because this is my master trade, guys. So I would have had my full 1% on this trade, right? This is my highest probability setup right here. Right here, right here, right here. Every time. M structure, pull, first pull back to the 50, smash it. Right here, I am all over this trade with my full 1% position. And my TP is to the 200. I'm literally super confident that once this happens and it confirms that price is going to run to the 200 EMA. And I want to be along for that ride when it does. Right. But yeah, super, super, super imperative, guys, that you just stick to the script. I promise you, it'll work. As long as you have edge, as long as you follow your process, you'll be good to go. Sorry for rambling. I get super passionate and all crazy. I start preaching when it comes to all this stuff. So
it's the passion. It's the passion.
Yes, seriously. Because I know what it feels like, right? To still be trying to figure this stuff out. Like, I know what that feels like.
Yeah.
And I know what it feels like to already know that, hey, that stove is hot. You might not want to touch it. I know what it feels like to, hey, you shouldn't take that trade. You're going to lose. I know it's close, but just don't take it, right? It's kind of like dating that girl who's not good for you. And your friends keep telling you, like, dude, she's not good for you. Like, let her go. And then you found out later on they were right. Like, nothing's more demoralizing than that, right?
That's the wisdom of age, huh?
Yes. So trust me when I say, guys, this is the way to do it. Stick to the trading plan for sure. But yeah, I think that's about it for today. Let me see. I hope that answered the question that individual had about the EMA. So yeah, just coming right back to it, guys. Once again, it just lets me know like where I am. It's like landmarks, right? So because trading is obviously one of those things where it's very chaotic and we're trying to create structure in a dynamic market. So you need some type of guidelines, you need some type of process and some type of landmark, right? Like before there was GPS, we would say, you know, hey, go down 4 lights, and once you get to that big red building on the left-hand side, you make a left there, you know, then you'll see a big open field. Like, those are landmarks to kind of help you identify where you are, right? So you don't get lost, because without the landmarks, you're lost. Right. So
Yep.
Just to answer that question and come back to it, that's what those EMAs are for me. 800 is just
I say order from the chaos.
Yes. It's creating structure in a dynamic market. That's what I try to tell my traders. Like, you got to pull something together, because without this, you're blind. You're totally blind. You're at a disadvantage. And again, it doesn't need to be EMAs. It can be whatever, you know, indicator or process you use, but you do want to use something to help you identify where you are in the whole process of things. Because if you're not, right, like I tell traders all the time, don't try to, how I went short coming out of level 1, don't try to take that the other way. I guarantee you're going to get stopped out. Guarantee it. Right? Do not counter trade coming out of level 1. Majority of the time, it'll get stopped out. As we just seen on that last trade I just showed, it went the other way. You cannot go against that. You have to let it go. So,
good.
Well, cool. That's pretty much it. Hope you guys enjoyed it. Please show up. If you guys got questions, you know, over the weekend about anything at all, make sure you write them down. So, you know, Howard and I, or whoever's here, can actually answer them for next week. And yeah, guys, any final words for you, Howard?
No, it's just have a great weekend, everybody, and we go again on Monday.
Yes, sir. I love it. Have a great weekend, guys. Be safe, and we'll see you next week.
Take care.
Take care.